A very good evening to all the CS professional students. I welcome you all to this marathon for the corporate, your compliance management and due diligence subjects for CS professional new syllabus. Now let me tell you the plan for today. I will be covering almost everything for your CS professional this subject. Okay, so I want you all to stick around with me with your book and pen and your module, and I will cover this entire thing. Now, so first is let me just give a small introduction about myself. I am Professor Zubair Jahangir. I am teaching this course for over 10 years now, and I have taught at the ICSI also at CS Professional and covering this subject as well. This lecture will be in English so that students from all over India, including South India students, will be able to attend and watch. Second important is obviously you're going to write your paper in English, and still I will be covering all the important things from your module. Second, with me I have a few things which I want you also to keep. The first is the scanners. The scanner includes the solution of the December 2024 attempt paper. You can get this scanner on our website. You simply go to jahangirtutorials.com, and in the free resources section you get these JT scanners. You can go ahead and download. Around 2000 students have already downloaded it. You go ahead, download it. The scanner contains the model ICSI answers. Normally students don't know that this scanner is available for all of you all. It contains the institute level answers. So very important, rather than referring any book, refer these scanners after you've done studying with the subject. The third is we have also launched the Dream Batch. The links are in the description of the video. The Dream Batch contains access to all the paid lectures, okay, for a nominal amount. However, this is valid only till your June 2025 attempt. After that it will cease to exist, it will expire. So till it's a limited time offer, go ahead and enroll. How do you do it? On our website itself, when you immediately go to our website, for example, if you just come here, automatically a flash will come about the Dream Batch. You click on that, you get all the lectures. Okay, you can go scroll down directly and you can enroll for it. Okay, whether you're giving group 1 CS professional, group 2 CS professional, all the lectures for all the chapters from the ICSI module, including the amendments and the ICSI supplement sheets, in a beautiful manner has been recorded, where you can watch it on the phone as well as the laptop. Unlimited views till your examination on a nominal amount. Okay, 299 something it is there. So this is limited limited time offer. Obviously after the June attempt it will come back to the normal regular pricing, but you will get an access to paid complete lectures. Now the third thing is we begin with the marathon. In the marathon I have put out the schedule. This schedule you can also get it. Okay, the first marathon that you are doing is CM, all the subjects at professional I teach, and you will see all these things I will be covering. Today's marathon is about CMADD, where I will break down this subject so easy that you will definitely get an exemption in your examination. Okay, now let's begin. Now when we start, let me tell you the flow of the subject. Okay, how a subject is to be understood. Okay, so when you look at your subject, the name of your subject, now pay attention, everyone's with me. Yes or no? I want you all to hit the like button, share it in your group, because now we are starting with the marathon. Okay, in the chat box, excited? Yes or no? Everyone excited in the chat box, exemption in the chat box, and I'm going to beautifully cover this entire thing for you. Everything you will see beautifully. You've never seen this kind of marathon ever. I've seen on YouTube also what is there, and you will see a massive difference in this. Okay, so just be with me, and module I will be touching upon. Okay, module, and taking you through all the chapters. So in the chat box I want you all to write excited, and we start with the particular marathon. Great. Ashwarya, nice. Okay, Surabhi, great. Okay, let's begin. Let's start. Lakshmi, exemption, great. Let's start. Okay. Hi. So I am your professor, Professor Zubair Jahangir. I have cleared with multiple exemptions and I will be your professor for this subject. Now, your compliance management, audit and due diligence, called as CMADD. I'll tell you how to approach this particular subject. If you see, this subject is broken down into three parts by ICSI. Okay, so the first part is compliance management. Second is about audit, and the third is about due diligence. So three parts. Let me take you through where how it is to be done here. In total, you have 16 chapters. If you're starting off, you should be starting off in this manner. Okay, I'm giving you the sequence of studying and I'll break down the entire thing. I'll take 2 minutes, but I want you to note it down. Okay, so the first, when you're starting studying, you have to study this part first, from here till here. Okay, it is part 1. You have to start studying from here in order, 8, 9, 10. I will take you through everything. This is your audit. This is all about audit. Okay, so you see audit, everything till the end you will have about audit. Okay, the next part is your audit due diligence. This is your second part. Your part 2 is your due diligence. Okay, this is the second part. So after you've done from 8 to 15 in order, then you come to the 16th chapter and complete due diligence. Now coming back up here, okay, which is about compliance management. Now we see about compliance management. Compliance management, further you have to break down from year till year. Okay, from year till year till 5 it is compliance management. Okay, so you have to do the compliances, and how do you have to do the compliances, all covered in part A. The next part, so this I told you is your part 3. This is the, after you've done with the part B, the audit and due diligence, then you come here to compliance management, complete the first 5 chapters, and this is how to revise for your exam point of view also. And after that you will see there is the last part, okay, which is your part 4. Okay, part 4. This is your, normally if you couldn't do compliance, then what will happen? It will be non-compliance, and then you will have penalties on you. How you try to get remedy from the act, how you have to approach, is given in the relief and remedies mode. So these two are connected. Your non-compliance you do, then you will have a penalty, and for that you have to get relief, which is compounding, what they talk about in your lesson number 7. So your CMADD has to be studied in 4 parts. I have given you. First part you finish from 1st to E15, then the second, third and fourth. Till here it is clear. Now let's begin with the chapters. In this also, when you start, the concept of various audits is a very generic topic. You can do it last when you complete. Now the more technicalities, only just basic audit is given in lesson number 8. The real chapter starts from the real audit starts from lesson number 9, 10 and so on. So in the marathon we will be starting from lesson number 9. After you do all this, the concept will become clear, obviously. Lesson number 8. So let's begin. Okay. Now, when I start, I want you to note down something. Okay, note down something and do it here. Okay. I want all of you all to keep a book and pen. Whatever is important from exam point of view, which can come, I am going to take all of that. If you want detailed lectures, obviously you can enroll. Our link is given below. Here we are going from exam point of view, what comes and what is to be studied, including understanding the basics of the chapter. I will be doing that as well. Okay. Now, let's start. So this was about the start. How do you have to start with the chapter? Now pay attention to this. I want all of you all to take a screenshot and write it down. Now pay attention to what I'm going to say. So we are going to do lesson number 9, 10, 11, 12, 13 in sequence now. Okay. And after we complete all of this, we'll take a break. So 9, 10, 11, 12, 13 in sequence. Now understand what is this entire thing. Can you tell me that as a auditor for accountancy, who is the auditor regulator to control accounting auditors? So you will say ICAI. ICAI has issued auditing standards for chartered accountants. Similarly, ICSI has issued auditing standards for company secretaries. Okay, how many auditing standards has ICSI issued? They have issued 4. So these 4 ICSI has issued. So all of this I want you all to mandatorily quote in your examination. The first one, CSAS1, is about audit engagement. Now what is audit engagement? Remember, this is what it is there. CSAS1 will be your audit engagement. How do you appoint an auditor? What is the offer letter? What all is to be contained in the offer letter? What after signing the offer letter the company wants to modify? So how a company secretary who is a secretarial auditor, an auditor in multiple things, how they should act and be appointed is given in your part 1. Now once we are appointed as an auditor through CSAS1 given in your lesson number 9, then comes 2. Once we are appointed, now we will start doing the audit. We will be collecting the evidence and in the end we'll give the report. So the audit process, how the process will be done, audit process and collection of evidence is given in your part 2. So what does part 2 talk about? Audit process, and in the documentation you will collect the evidence. So if I am appointed as an auditor, I will look at the books, I will ask certain questions, I will take third party interviews. So all of that process is in CSAS2. This CSAS2, if you go to see both audit process and documentation, these two will talk about CSAS2. So if you go to see your audit process and documentation is in CSAS2. After you prepare the everything, then you will make an opinion. The opinion is given in audit opinion, is his entire report. On basis of the evidence, the auditor will give his report. That is covered in your CSAS3, which is in your lesson number 12, CSAS3. Everyone's with me? So in each chapter, this is what we are going to study. So we are just taking a understanding first. And in the end, company secretaries are secretarial auditors. That is your CSAS4. So CSAS4 is about secretarial audit, how is to be done, what is the procedure, what is the collection procedure, okay, what all is to be checked, the scope and audit, etc. is given in your CSAS4, which is your CSAS4. Beautifully, sir. CSAS 1, 2, 3, 4 done. This is what we are going to cover. And then we will take a break. So lesson 9 to 13. Everyone's with me. This is all that we have to mandatorily quote in the exam. So let's begin with audit engagement. Clear? Let's begin with lesson number 9. So which is the lesson that we are doing? Lesson number 9. Okay. So this is what we are going to do. Audit engagement. Okay, let's see. Now what I will be doing is I will be covering the important stuff from the chapter which comes in your examinations. Okay, which comes in your examination. I have gone through the past exam questions and I know that these topics can come, and I will be giving you all things which you all should note and write it. First, let's begin. So we start with your lesson called as audit engagement. Let's understand the meaning of the term audit engagement. Okay. So audit engagement is basically the offer letter, appointment letter between the auditor, company secretary and the company. So audit engagement is a contract. What it is? It is a contract by which the auditor is appointed by the auditee. The company is the auditee, the one who we do the audit. We are company secretaries, we do the audit. So we will be appointed by the company and an offer letter will be made. That offer letter will be called as your audit engagement. This chapter CSAS1 is all about audit engagement. What all would be there in the offer letter? So in the offer letter it will be written what is the type of audit I have to do, I am responsible to give an opinion, that will be there. Then there will be about how much money will I get. The basic terms and conditions will be covered about the audit. Okay, so now let's see. Let's learn the definition, because obviously when we start we'll have to write the definition. So audit engagement is a agreement. So you can call it as an agreement or an arrangement. So audit engagement is an agreement between two parties, between the auditor and the auditee. Finish. Between the auditor and the auditee. Okay, between the auditor and auditee, and it will cover the terms and conditions of the audit. Okay, terms of reference of appointment. So if you want to see they have given you a format in the end of the chapter, how it is there. So it will be in the form of a contract where an offer is given to us, we are accepting it, and these are the terms and conditions of the audit. So what do you think will be there as a company secretary? Why a separate chapter? What all is so important in it that I have to keep in mind? Okay, so the very first thing is they will start saying that what all should be covered in the agreement. If the company is trying to limit my scope, is trying to say you will not do this, you will not do that, you will give it in this format, and I feel that it is not as per law, I will raise an objection, I will reject the audit. Okay, so first thing is, I told you audit engagement is nothing but a contract. It is a contract. So in contract, if I go to see, contract is nothing but an offer and acceptance. It is nothing but an offer and acceptance. So who is giving the offer? Company will give offer or auditor will give offer? Think and tell me. See, logically, either company can approach you or you can approach the company. My firm can approach the company that, listen, we are a group of auditors, we like to do your audit for the next financial year. So anyone can give the offer. There will be, before signing, there will be pre-agreement engagement meeting will be done. Common sense that in one go the companies meet the auditors. Before signing the contract, there will be some discussions that will be there. Now I want to understand, as per Companies Act 2013, which gets appointed. Okay, so as per Companies Act 2013, I need to know my sections for auditors. Okay, so first I need to know EDT1. EDT1 is the form for auditor. Okay, and the section number also you can note down is section number, which is a section for appointment of auditors. Which is a section for appointment of auditors? I want you all in the chat box, which is a section. Okay, so they're not given, I'll tell you. Okay, so you can quote it in the exam. Okay, you can quote it in the exam what I'm writing. So if I'm writing something, means it's massively important. So section 139 talks about appointment of auditors. It talks about appointment of auditors. Okay, for once an auditor is appointed, okay, then that auditor will be appointed in a specific form. Company has to be the company has to inform ROC in EDT1. It is a appointment of auditors. Second, if I didn't like the auditor after appointing him, then the very next form is there, that is called as removal of auditor. Okay, is in ADT2. Now imagine if the auditor, you removed him, or he can also resign. ADT4, ADT3 is about resignation of auditor. What it talks about? Resignation of auditor. If the auditor did not like, he will resign. So all the form numbers we should be done. And while doing the audit at all, if the auditor detects a fraud, then it will be given in EDT4. Okay, that will be their reporting of fraud. We'll see how is the reporting done, to whom the reporting is done, and this ADT4 applies to CA, CS, CMA, because we are also auditors. Reporting of fraud. So in a company, if I detect a fraud, how it will be done. The provision here is given under section 143 subsection 12. Reporting of frauds. Now ADT1, okay, talks about qualification. Disqualification is given in one section 141. So appointment of auditor is there, and the qualification that he should be a chartered accountant, what all he should not have is given in 141. In appointment of auditors, if you remember, okay, I'll just come to it. Let's see, when we do it, we'll see who appoints the auditor. So till here it is clear that a particular audit engagement is a contract where the offer and the acceptance will be given and the terms will be contained. The eligibility and diseligibility, so qualification and disqualification. So maybe for a financial auditor, he has to be chartered accountant and he should not be holding shares. We'll see the disqualification given in section 141. Beautifully explained, sir. Big fan of yours. I know, even I am a fan. Okay, of myself. Okay. So now coming back to the process of offer. Okay, so they have broken down into two parts. They have broken down into the two parts. One is that, so it's not that important, but let's see. So the offer is there, offer and acceptance is there. So both the parties, one will give an offer and the other one will accept, and so we'll have a contract called as audit engagement. Now this could be done directly. I might have called you up and I would have said, hello, your XYZ firm, we want to get our next audit from you all. So it's a direct. We contact you, we have a pre-audit meetings and discussion, and the terms of reference and the scope and the money part will be discussed. Now money part we call it as audit fees. And the other one could be, I don't directly approach you, I issue a tender. What do I issue? I issue a tender. I get multiple quotes and then I select you through a selection process. So let's see. So selection of a prospective auditee. So I am the auditor. Okay, selection of the prospective auditee based on the following risk. So you will look at various aspects. So the auditor has to give his willingness. You will look at who you want as your auditor. There will be a pre-engagement meeting will be done. Okay, in the pre-engagement meeting you will look if we have a conflict of interest. So a little later also it will come that when I am appointed, someone has approached me that become my auditor, I have to do a conflict check. What I have to do? I have to do a conflict check to see that I am not anyway holding shares, none of my relatives are holding shares, etc. in that company. Okay, and then the final part will be the signing. So I don't expect this to come in your exam, that you are not stressing on it. I will stress on the things that comes in the exam. Now same thing, only one tendering process is done. So in the above, you are directly approached, you will look at all the risk elements, whether he can perform, not perform, and then in the end you will sign. That is the above part. Now if you are seeing it's a tendering process, so a tender will be issued. Okay, then people will submit the bids, various bids will be done, and then the same process. Then you will select, have a pre-engagement meeting, see that there is no conflict of interest. The auditor should also see that the number of audits it is coming. So a company secretary cannot take unlimited audits in a year. So there is some thresholds given. The thresholds also we will be doing. That this is the maximum number of audits I can take up in a year. So I should be within that limit, only then I can take up. Okay, there is no restriction on my, so there is no limitation put on my audit. Like they will say, you know, you will not enter in this room. I said to do the audit. So no restriction should be there and there should not be debarred. So very simple. I'll just check whether he is eligible to give a audit or no. Okay, he will be able to do the audit or not. Now precondition, now simple headings we do and we finish it. Okay, preconditions of accepting a audit. Okay, so I'm just thinking that what do you mean by the preconditions? Before accepting any letter, the auditor should ensure the following things. So if I am an auditor, I will look at certain things. Now what all are the certain things? Only few things they have given you. That I will see that I am able to do the audit. So the reporting framework used to prepare is acceptable, and the auditor should confirm that the management agrees to acknowledge and understand the responsibility. So two things. Now as when we do audit multiple times, we ask for information, then the management don't give information because we are going to ask them, we are trying to uncover their mistakes. In audit, I try to detect errors, I try to detect frauds. So the management resists, the management disallows information. So I have to see two things. My precondition is I have to see that the reporting method that I am following, or they are telling me to do, whether it is acceptable or not acceptable. And second, I will see that the management is understanding their responsibility, that what the audit is, where I will ask hard questions, I will ask for information. So I will try to ensure that they do not give misstatement, and they should be giving me access to all the data so that I can collect my audit evidence. Now tell me one thing, if the company is telling the auditor, so imagine a company like Infosys trying to do a secretarial audit, is telling me you don't check the file number 6. I will say, listen, you cannot limit my scope. So limitation of scope, whether it is allowed or not allowed according to you. So the answer is, you cannot say simply no. You will see what is the kind of limitation, whether the limitation is acceptable within acceptable, or it is not acceptable. Okay, if it is violating law, you will reject the audit. If it is within the law, you will look for other ways of collecting audit evidence. So the auditor should not accept any limited engagement unless required by law, or unless he can fulfill the requirements under law. Okay, so if issues are there, if the issues, preconditions could not be completed, so I could not get that assurance, so I will decide whether it is acceptable, not acceptable, should I do the audit or not do the audit. If there is uncertainty, then you might reject the audit completely. Okay, and while rejecting the audit or accepting a limitation, you will mention the reason, what all they had told, restrictions, and why are you accepting. So here the auditor should not accept the proposed engagement if the reporting framework is unacceptable and if the agreement cannot be completed. Okay, now criteria for declining from an audit, very important. Okay, when I should reject the audit. So when you should reject the audit, I'm thinking, when I should reject the audit, I'm thinking that appointment, and they're appointing me, they're giving me money, a full bag of money is kept, but I'm saying no, I don't want to take. Why? The first thing is, I feel that my independence is affected. If I feel that the conflict of interest is there, or I am a related party, or I am falling under disqualification under 141, so I will reject the audit. Second, I will look at the ability. Okay, if I feel that I don't have the necessary staff, or I don't have the technical skills, or I will not be able to do justice, I will reject the audit. So maybe if a small firm is trying to do an audit of a big four, of a top 100 listed company, listed company, you can reject it if it is not in your domain or it is outside of your reach. And third is which would regard the engagement as one of a special conditions representing unusual risk. So again, when I should reject, if I feel that there is a unusual risk, okay, involved, if I feel that the company is having a lot of fraudulent activities or any risk I don't want to take. So unusual risk, I don't have appropriate technical skills, or if I am my independence is, conflict of interest is there, then in such cases you should decline from signing the offer letter. Now the next we will do is, who is the appointing authority for an auditor. So the question largely depends in which kind of audit it is. Means I want to know that who appoints an auditor. BOD appoints or shareholders appoint. Okay, so it depends on the type of audit. So if I see secretarial audit, cost audit, okay, and is done by BOD, okay, cost audit, secretarial audit is all done. Internal audit is done by BOD. So only board of directors, shareholders requirement is not needed. So do I need to take shareholders approval? Answer is no. So all these audits Will come in depth also, we will see, but right now just understand who is the appointing authority, BOD. Even in company, the first auditor is appointed by the BOD. In companies where the subsequent audit is there, it is done by the shareholders, and if it is a government company, then it is appointed by the Computer and Auditor General of India. So depending on the type of company and depending whether it is a first audit or a subsequent audit, the appointing authority changes. Clear? Okay. Now remember one thing is your financial audit, okay, is given under which section? Financial audit means your balance sheet audit. It is given in there where a chartered accountant does that. So a CA will do it. Chartered accountant will do it. It is given in your section 139. Okay. Now if I talk about cost audit only a CMA can do it. Only a cost and management accountant can do a cost audit. So that is done under section 148, cost audit. Internal audit could be anyone who the board recommends. Okay, so whoever the board deems fit will do an audit in internal audit. Your secretarial audit, it is only by a company secretary. It is under section 204. In IBC, if you know, in your Insolvency Bankruptcy Code 2016, when a company is going under the CIRP process, there is a concept called as a corporate insolvency resolution process. So where a company is going through insolvency, all the powers of the BOD come with the resolution professional. So in IBC matters, RP will be the appointing authority. Okay, if a company is under insolvency, because all the powers of the board, normally all the board appoints, na. So the board is no longer having power in case of insolvency matters. It all goes to the resolution professional. So these sections you need to know by heart. Okay. Now, appointing authorities we are done. Told you. Liquidator, etc. Okay. CIRP process. You can note it. Now again, very simple is in the audit engagement, what will be written? Terms and conditions. Just think it's an offer letter. So what is the type of audit? What is the responsibility of the auditor? What is the responsibility of the auditee? What all are the risk? Any limitations if it has been put, and what is your how you plan to do it? Everything will be in the audit engagement as agreed between the clients. It's a contract, right? So whatever they have decided, that will be there. Now, one of the most important thing is the fees. How much fees you can charge. Now what they can give you specifically in fees. You think they will tell you the fees should be XYZ. You think your ICSI will tell in CSAS1 that the fees of the auditor will be XYZ. They are talking to company secretary. Will they tell that? Answer is no. What do they tell? They tell that don't charge less fees. Charge more fees. And the fees will be dependent on the size, nature of business, type of audit, scope of audit, etc. Okay. So the audit fees is charged by the auditor on various factors such as size of the audit, nature of the business, internal control systems, how good it is. If the company is technologically adopted company like Amazon, everything is digital, so the effort of the auditor is less as compared to a cash business. So accordingly I will change my fees. Okay. Company like Netflix, it's so easy to audit them. Nothing is cash transaction is only not there. Scope of audit means which audit are you doing. Okay. And scope also means the type of audit, what is to be done, whether the subsidiary is to be included, which how many companies or how many branches are to be done. That is the scope, what all is to be covered, and the frequency of audit. So normally it will be for 1 year, but internal audit could be done for more time, etc. So the fees should be a fair reflection of the work performed. Nowadays, a lot of thing comes in where there is due to this funding element coming in, people are giving below the cost. So the cost of the goods might be X. They are disrupting the market. So they are saying don't do that. It's unprofessional. So very important that the auditor should not accept very low fees. It's a beautiful concept written and a guidance given to all of us. The audit services should not be offered or rendered under arrangement whereby no fees is charged. So you cannot do an audit where no fees is charged. I'll do it for free. Not allowed. Instead, they have said that if you do an audit, against with any of these fees, following these rules, you will be under CS Company Secretary Regulation 1980. You will be punished under professional misconduct. So if I take up an audit and I say that I will give you this opinion, I will give you a positive opinion, I will give you a good picture. If I take an audit mentioning this, some kind of a future guarantee, it is professional misconduct. Okay, so nothing should be done to affect the quality of the audit service. In case of statutory auditor, section 142 says provides that the remuneration to the auditor shall be fixed in the general meeting. Okay, also that the auditor can claim the expenses, out of pocket expenses with him. So I think this is good enough to build an answer. We can move ahead. Okay, now CSEET, all this is CSEET. Now they'll repeat everything that we've done. So we've completed the entire chapter. Now it will just be a repeat of things that we have done. So first thing is, you have to write this CSEET audit engagement, but along with that you will also mention this act which company secretaries are there for professional misconduct, section 190 CS Act 1980. Okay, you will quote it in your examination. Now very, very important, that is secretarial audit applicable for all companies? I want a yes or no. Is cost audit applicable for all companies? Is internal audit applicable for all companies? Answer is no. If audit is not mandatory and I still do the audit, do I need to follow these standards? Very, very important. So if anything is voluntary, law has only told you don't do it, yara, we don't care, then how you do it is how it will even matter. So a voluntary audit done does not have to follow the secretarial standards. So they can ask you a question that a company voluntarily did the audit, do they have to follow CSEET? Answer is no. Okay, very, very important, they can ask in the exam. Okay. Now one thing is this one very simple little thing. CSEET also says logic that if I'm picking up the company for the first time, so let's say I am an auditor and I am newly be appointed for Infosys, so it's a new audit. Now let's say if I have done an audit and for the next year also I am doing for Infosys only, so it's a recurring audit. Okay, so now for new audit, it is my duty to speak to the incumbent auditor. Sir, what do you mean? See, they will always tell you that it is when an audit is being done. I have been newly appointed in Infosys to do the audit. So when a new audit is appointed, there is one important formality that I have to complete. The auditor has to complete. He has to connect with the previous incumbent auditor. The previous auditor, I have to speak to him. I have to give a written application. NOC is not required. I don't require a no objection certificate. There was a case law that is NOC required from the previous auditor. No, I simply have to inform him that listen, I am this new guy. Do you have to tell me anything? I want to, if I have any questions or doubts, I'll ask you. That is fine. Recurring audit, I can directly take it because it's a, I've already done the last year audit is done by me and I'm doing the current year's audit also. So I can do. And the third, which I feel they can ask you in the exam, if after signing the offer letter, the audit engagement, they are asking you to change the audit, change the terms and conditions. So should you allow or not allow? So the answer is that changes in the terms of audit depends on the on various factors, whether the change can be after the change the law can be followed. Second, you will have to see whether the change does not restrict your limitation to the audit. If I have another source of getting the evidence, then I will move ahead. So let's see what it is there. Okay, types of audit, new auditor is there. Okay, then in subsequent audit is the recurring and changes. In changes, what I told you that you should adhere to the standard and the revised agreement should also follow the ensure that the laws are followed. Okay, now this is giving you definition of KMP. Obviously, company secretary is a KMP in the section 2 subsection 51. Now, this multiple times they have asked, okay, multiple times they have asked definition of the term senior management, whether it includes board of directors and whether it includes company secretary. So what happens, understand that senior management. So when I'm talking of section, this is regulation 16. 1D of SEBI LODR, listed companies have to follow. So in section 16 is a definition section. So if you open section 16, you will see a lot of definitions given. Okay, so they talk about the definition of senior auditor. Who is a senior management? So senior management means anyone who is other than the BOD. So it does not include the board of directors. It includes company secretaries or any other person who is in the management, does not include directors of the company, because it is the definition for the purpose of LODR. That's it. Okay. Now comes the audit process. Okay. Very, very, very simple. The audit engagement process. Now this, we have already done it. So there's nothing new. That if I'm appointing him, I will have a pre-engagement meeting. I told you that they have a meeting. Then you will appoint them. In appointing them, you will have to ensure that the resolution is passed as required by law. And one very, very important thing, that I told you, BOD appoints the auditors. Okay. BOD cannot delegate this power to anyone else. So here they have given that appointment of internal auditor cannot be passed by resolution by circulation. This is important, that resolution of circulation, how we have postal ballot for general meeting. For BOD, they have a resolution by circulation. They circulate the papers and all of them they send their opinion back in the registered office, will be counted and this is passed. So they don't have a physical meeting. Here this is not allowed. For appointment of auditor, everyone has to be at a duly convened board meeting. This is what they are saying. Okay. And further, it cannot be delegated to anyone else. The BOD only has to do it. Engagement letter will be done, the content, same thing they will repeat throughout the entire chapter. Remuneration we've done. Now one very, very important thing is about professional misconduct. What do they talk about? Professional misconduct. Under which regulation? Companies Act 1980. In above also, in other chapters also it will come. Right now just understand that what is not allowed. In the exam they have asked you this, okay? In the exam it's a PQ, past exam question, clause 9, schedule 1. I'll tell you the full structure in one go. Okay. So all of this I will tell you. Pay attention to what I'm saying. In other chapters, more professional misconducts are discussed, but I'll tell you the entire crux in one go. That if we are a CS, we are the auditors, right? We are the auditors. And this is the company. The company is the auditee. The company is the auditee. Okay. Now, what happens is the auditor will prepare a audit report. They will prepare a audit report. Okay. In which he will contain the opinion based on the audit evidence. And whatever collection he has done of the evidence, he will give his audit report. Now, company secretary auditor. Okay. So what happens is this audit report signing has to be done by the CS himself, one, or who is the partner, cannot be delegated to anyone else. If there is a delegation, it is a professional misconduct. Okay, one. Another kind, so obviously the CS will only sign, they have to take that responsibility. They can't give it to anyone else who is not a partner or an employee. Second, they say that if is a professional company secretary, chartered accountant allowed to do marketing, advertisements, give certain commission base, give commission to certain people to get me clients? Answer is that is also not allowed. So if anyone I give a commission or a profit sharing to anyone who is not my partner or my employee, I can give money to my salary can be given, profits can be shared among partners, anyone else, professional misconduct. So that is given in your schedule 9, schedule 1, clause 9. See, a company secretary is guilty of professional misconduct if he accepts the fees based on percentage or results of the engagement. Okay, so if I tell that I will give you 2% of the tax saving, so if I say that I will do a tax structuring for you, and how much ever money I save, 2% will be my charges. So this is also professional misconduct. Now I told you very important is a communication with the previous auditor. So all this is repeated again. We've already done again. So the chapter is actually half. They repeat it again, making you revise. So I told you no NOC is required, but you need to speak to the previous auditor. Okay, and you don't have to take his content, you have to inform him. Okay, and it should be in writing. That communication to the previous auditor has to be in writing, and you will also mention the particular regulation that as per CS Act 1980 I am mandated to give you a reference that I have to mandatorily give you a notice that I am appointed as the next auditor. And even if I send the notice, can I become start doing the audit immediately? Answer is no. There is a compulsorily wait for 7 days from communication before accepting the audit. Very important. So 7 days, I give you a notice that listen, I am being proposed to be appointed in this company. I give in writing, I post it to him, and 7 days I wait. I cannot accept it before, otherwise it's again professional misconduct. Okay, and under which thing I have to inform is Schedule 1, Clause 8. Okay, Schedule 1 of the CSEET. Remember, Schedule 1 of CS Act 1980. Okay, that it is mandatory for every company secretary. Very important. Before accepting any of the following assignment, to communicate with the previous incumbent. Incumbent means the previous company secretary, as a terms of Clause 8, Part 1 of first schedule of the company secretary. You can remember this. Excellent. You can write it. Now you see that as a company secretary, we sign a lot of documents. We not only sign the secretarial audit, we do annual return signing, we do a signing of depository reports, all these reports, certification under Companies Act, LODR, internal audit, reconciliation, compliance audit. All this, when we sign, we have to inform the previous guy. Again, the entire letter has been given, the intimation letter. Now you should know how to, letter writing is also there. They ask some formats of letter writing. So you should know basics, that you give the details to so and so. Dear sir, intimation under Clause 8 for Schedule 1 of the CS Act. I have been appointed as an auditor, and pursuant to Clause 8 Schedule 1, I am hereby giving you a communication. Okay, give it, that I have been appointed as the auditor, and you give all your details. Done. Now again, before accepting the audit, I have to keep in mind the limits on audit engagement. What I have to keep in mind? The limit on audit engagement. That how many audits can I take? So can I say it's very important? Very important from exam point of view. A company secretary can take how many secretarial audits? How many secretarial audits? Everyone in the chat box, can you all tell me how many secretarial audits can a company secretary take? Okay, very good. So the thing is, a company secretary, here they have given you the guidelines that he can take up 15, but see, pay attention. I'll tell you what is the scene. That limits on secretarial audit reports. So 10 secretarial audits I can take up, and additional 5 if I am peer reviewed. So if my firm has got peer reviewed, I can do 5 additional audits. Now, if you just read this line, that all companies, now as per the new law, all companies must get their secretarial audit compliance report done only by peer reviewed firms after 2023. So if 2023 is done, so all companies have to get their secretarial audit or compliance report only through peer audited firms. Means every company can only engage someone who is a peer audited. So here that means I cannot. So here what are they saying? That now if I'm not peer reviewed, I'm not allowed. Earlier it was allowed, that is why this bifurcation is given. So ultimately it is 15. So how many companies I can get audited? So first of all, if I'm trying to tap a listed company, I have to mandatorily get myself peer reviewed. So I get a total of 15 companies that I can do an audit. So pay attention, okay? So my limit for secretarial audit is how much? 10 plus 5 more if I am peer reviewed. Done. Clear? So in total, and now you almost everyone has to get peer reviewed. So total we can say is 15 secretarial audits only we can take up. Clear everyone? Very good. Okay, 15. Just this, remember the final one. Now there's another kind of report, same under Regulation 24A of SEBI LODR, which is your annual compliance, annual secretarial compliance report, regulation number 24A. So here also they say that a PCS can issue 5 reports individually and 5 more if they are peer reviewed. So total of 10. So here, as we saw, limit for secretarial audit, normal 10, and if peer reviewed you get 5 more. Now limit for annual secretarial compliance report, which is SEBI specific, which is about SEBI laws. This is SEBI specific, okay, which is given under your regulation number 24A, and this is under section 204 of Companies Act. Okay, now limit here they have given you 5 normally, but you get 5 more if you're peer reviewed. So in total how many you get? 10. Clear? So this is the limit. If I go beyond this limit, it is a professional misconduct to do an audit in excess of the limit that you have. Okay. Then I told you a very important aspect, that while doing the secretarial audit, you have to see that there is no conflict of interest. Now conflict of interest is very simple words, that you don't have any independence is not affected, you don't have any biasness, you don't have any connections, you are not being earning. So here they say that, listen, conflict of interest means substantial conflict of interest should not be there. So how do you define substantial? Certain thresholds have been given. I will take you through the thresholds. Extremely important part. Okay, scenarios can come up. So first of all, the auditor shall not have any substantial conflict of interest. Common sense. If I'm taking up the project of doing an audit, I should see that I'm not connected with the company. Okay, so you should not have any conflict of interest. And substantial means big conflict of interest. Small conflict of interest is there, I should disclose it before accepting the audit engagement. So if I have 3 shares, 4 shares of a company allowed. So now let's look at the term substantial. Very important. This I want you to note it down. Okay, not substantial conflict of interest. So the conflict of interest shall not be construed to be substantial. Means they are saying it's a small conflict of interest, so it will be substantial if you cross these limits. So if you are holding not more 2% of paid up capital or 50,000 nominal value. Nominal value is face value. Whichever is lower or more than 2% of the voting power, or you're indebted not exceeding 5 lakh rupees, or you are in employment of more than 2 years ago. In such cases, you are not a substantial conflict of interest. Sir, can you repeat the numbers? 2% paid up capital voting power, or 50,000 of face value of shares. If I don't cross this limit, it is not substantial. So 2% and 50,000 nominal value. Any of the thresholds gets hit, I am it is substantial conflict of interest. I cannot take up the assignment. If it is, let's say I'm holding 20,000 nominal value of shares, so it is a conflict of interest, but not substantial. Substantial you cannot. Indebted of means you have taken a loan from the company of not exceeding 5 lakh rupees. So if it is greater than 5 lakhs, I am disallowed. Less than 5 lakh, it is a conflict of interest, but has to be disclosed. I can still take up the assignment, and I am in employment more than 2 years ago. So I was a old employee 10, 20 years back. I was in that company. So it is not substantial. But if it is there within the past 2 years, then it is substantial. So let's write down the thresholds. What is they have given you. So what is substantial conflict of interest? So 2% of paid up capital or voting rights, or what was the face value, nominal value of rupees 50,000 rupees, or one more thing was there, I was indebted, debt of rupees 5 lakhs. So these are the thresholds. If I exceed the threshold, so if you exceed these limits, then you are substantial, you cannot take up the audit. If it is within this limits, then you have to disclose. And on basis of that, they've given you a few examples also, which all I have covered here. Okay, I believe we are done with the chapter now. All of this about this only. Okay, confidentiality. So obviously when you take up an audit, there will be a clause of confidential that while doing the audit, performing the audit, you have to maintain professional confidentiality. It should not be divulged except for the purpose of conducting the audit. Okay, confidentiality in the work scope, everything will be kept confidential. Okay, safeguards will be done. You have to ensure that you educate all the employees also. You might say as a partner, but your employee went and disclosed. So education to all the employees is important. You would normally enter into a NDA, non-disclosure agreement. Okay, that is done. Changes in the terms of the audit engagement. I told you this is important. That can you, if there is a change in the audit engagement, so here you should not agree where it is no reasonable justification. So if there is no reasonable justification, you will not take up. Written agreement for change. In case if you are accepting it, if you feel that the change is genuine, then you can make a new agreement or a supplementary agreement, an additional agreement, adding as an addendum to the original agreement. Reason for requesting the change. So you will look at the why the change they have asked, whether there is a change in circumstances, whether the scope has been restricted. Okay, all those has to be seen, and you have to see the justification, the why they will give a reason. And if it is not justified, you should reject the audit. Very, very simple. Consent is to be taken and precautions is to be taken, that you should not agree to which restricts your scope, affecting the the laws. It is asking you to give, avoiding negative report, modified report which will come, or unfavorable report. If they are asking you to do that, then you will reject the audit. Okay, and this is the entire format, and that's it. We have completed the entire chapter is done. Audit engagement. And audit engagement spoke about how do you appoint the auditor, in the appointment letter what all has to be kept in mind before taking up the audit. So that is it, guys. We are done with this chapter. Now we begin our next chapter, which is your audit, your 10th chapter. Okay, what is your 10th chapter? Audit principles and techniques. Can anyone tell me in the chat box which CAAS is applicable? Quickly. Which is the standard that is applicable? Audit principles, techniques. Okay, so obviously there is a reference will be given to CS.to also, which talks about audit process. So even this chapter, the next chapter will talk about CS.to. Okay, now we are talking of audit principles and techniques of doing the audit, which is about audit evidence collection. Evidence collection. Clear till here? Everyone, yes or no? Okay, excellent. So in the chat box, is everything clear? Then we start. We take a 2-minute breather. I'll take a breather, and then we will start with this chapter. This is audit principles and, okay, this is, which is the chapter we are doing? Audit principles and techniques. Let's see. Okay, so we'll start with CAS2, which is actually your lesson number 11. So we'll do lesson number 11, go in order only. Okay, That's how we'll complete. Lesson number 10 is also very simple. It has basic principles. We'll go into the technical important chapters. So now we will start with your uh, audit process and documentation, which is your CAS2. Okay, audit process and documentation, CSEET. Okay, so if you not like the video, do like the video. We'll start it in 2 minutes. Okay, 2 minutes. One request to all of you all, please share this video in your WhatsApp groups. It's my request to you all. You put in so much effort. We want to get some happiness we get when we see it. Okay, so that's it. We'll just take a short 2 minute breather. You can revise this chapter. I will come or revise the previous chapter, whichever you want. I'll complete it in this chapter as well. Okay. So I will see you all after the break. I'm going in order only. CAS 1, 2, 3, 4, and then we'll complete it. Okay, so guys, am I audible to y'all in the WhatsApp? In the Can you let me know in the chat box if I'm audible and visible? I'll knock off this chapter also really quick. Yes or no? Okay, so in the chat box, can I have GTG in the chat box? I'll quickly complete it. GTG in the chat box, so I can start. Everyone, Ashwarya, great. What about others? Gautami, nice. GTG in the chat box and we begin. Okay, let's begin. Great. Chalo, let's start. Now we start with the next chapter, which is your lesson, your audit process and documentation. So here the standard that is there issued by ICSI first is about audit engagement. Okay, so CSEET talks about whenever an auditor is appointed, the engagement letter, the appointment letter, how it will be there, what all it will contain is given in CAAS1. This chapter contains about CAAS2. CAAS2 is about auditing standards, which speaks about process and documentation. So what is audit process and documentation? Let me tell you. So when a company engages an auditor, so the company appoints an auditor will check, verify the financial, non-financial data. So the company becomes the auditee. So as we saw in CAAS1, the company has appointed the auditor. Okay. Now the auditor will come and do an audit on the auditee. This is called as the audit process. So we will see how is the process. So the very first thing that will come in the audit process is the audit plan. In the audit plan, the auditor will understand the company. So there will be a thing about understanding. Okay, so the understanding the company, they will understand the scope of audit, the type of audit, etc. This will be done. So the auditor will say that which audit you want me to do, tell me about your company, your business, etc. So that will be done. The understanding part will come. The second, after understanding, then I will say, oh, you're into this business. I will identify risk assessment will be done, risk areas that I have to be careful while doing audit on these things. Okay. Then I will determine my materiality levels. The materiality is the thresholds. If this much of error is there, I will change my opinion. So a materiality is always a figure, a amount, a particular number, that if you get these thresholds, you exceed these thresholds, I will give a negative opinion. If it is within this threshold, I will give this opinion. So that materiality will change depending on the company, the business, the type, etc. Okay. Then while planning, I will also determine my team, who all will be in my team, etc. The next comes the after the audit plan, then in the process I will go ahead with the audit program. In audit program, I will do detailed planning. Now the earlier one was a plan, it is a overview. I have to the timelines. Okay, I will be written that the plan, how much time it has to be completed. I will identify the laws applicable, etc. So just a understanding of the business, and that audit will be done in the first part. The second part is the audit program. In audit program, it will come that my audit staff, whoever it is there, okay, how the process of collecting evidence, the process of evidence collection of evidence will be done, how I will collect the evidence, etc. Okay, who will do what. So I want to ask you, how is audit evidence collected? If I'm doing an audit, How will I know the company has complied with the law or no? So obviously I can do multiple types of checking. I want you to note it down. So once you understand how evidence is collected, your entire life will be easy. So one is called as vouching. In vouching, I check the vouchers, the invoices, the bills, receipts, etc. The other one is called as verification. Verification is related to assets and liabilities. So any balance sheet items which are there, okay, whether the assets are in existence, where are the assets, whether it is taken on loan. So that is with respect to the balance sheet items is verification. I physically examine the goods. Then the comes is we could say is confirmations. Confirmation is a third type where I would want to confirm with insiders or outsiders. Confirmation with third party. For example, if in your balance sheet it is written that you have a cash balance of 5 lakh rupees. So my job is to go and see and ask, take a confirmation from the bank. I'll go to HDFC Bank and give a letter that give me that their average balance is so and so as stated by them. So confirmations will be taken. Then questionnaire will be done. Questionnaire. Now, sir, what is questionnaire? In questionnaire, I prepare a checklist. That tell me whether you have complied with this laws. Yes, no, not applicable. Okay, so those will be done. One other way is interviews. I will have various interviews of the management, of the employees, of the customers, of the suppliers. So this way I will collect the evidence, and obviously I'll look into the books, etc., and then give my opinion. Now, after the process is over, then I come with the third thing, which is called as documentation. Sir, what do you mean by documentation? Obviously, when I check, I have to record everything. So that recording is called as audit documentation, which comes as an audit file. It comes as an audit file. This file contains the working papers of auditor. Sir, what is working papers? A working paper is the what work the auditor has performed is contained in the working papers. Who had done the audit of this branch? What all did he check? Verification letters, all those evidences that you've collected, proof of all of that will be maintained in your audit file. This is what the chapter is about. Let's begin. Okay, so now I will give you some keywords which I want you to note down. Okay, first, this is under CAS2 where I will do process and documentation. Now in the process I will collect evidence. Now my job is that I have to ensure that the audit evidence is sufficient and appropriate. So sufficient talks about quantity, that I have enough evidence. Maybe if I have to check whether the company has complied with the law and I have just checked 3-4 transactions. I have just seen 3-4 transactions. I have not seen any related party transaction. So they say it is a risk. Now you don't have much proof. So definitely how much extensive research you have done, quantity of evidence collected is in your sufficiency. So for evidence, I want you to write down in your exam as well that the evidence should be sufficient and appropriate. Appropriate means quality of evidence. Imagine if I'm saying that I have evidence of management representation. Management has only given undertaking that I've followed the law and I'm relying on that. So that is a very weak evidence as compared to a third party confirmation. So that differs. Okay, so quality of evidence is also very, very important. So this is what is the objective. So what is the standard, the objective of the standard? Now you can write this in the exam that the objective of CAS 1 is to ensure that audit evidence is sufficient and appropriate. Okay. Documentation is your all the working papers, your plan, your program, all of that is to be seen. Evidence is the proof on which the opinion will be given. Okay. Evidence, and management is your board of directors, etc., whoever it is there, whoever you have spoken to. Now coming to the audit process, as I told you, plan. In planning you will understand the risk area, you will understand the business, you will set up materiality levels. Sir, what is materiality levels? Materiality is that threshold where the opinion of the person relying on the statements will change. Sir, what does it mean? So imagine if you have got 39 in CS. If a person has got 39 in or 49 in examination, so for us CS will say it is fail. But moment he get 1 mark more, the opinion of the reliers have changed now due to that one limit. So the materiality is 50. You have to get an average 50% to clear the exam. So that materiality becomes 50. So planning is done. It should be giving you all this, and execution, it is all about collecting evidence. One of the evidence collection is, in addition to what I've written, you can also write substantive checking. Substantive checking means detailed checking. And analytical procedures can also be applied, which is ratio analysis. So what does it mean? Analytical check. So analytic means to analyze. I analyze your financial statement and I find a track record that your sales are dipping every year from the past financial year, whereas competitor sales are increasing. So these are these thresholds which I will report. This is called as ratio analysis, where I can find my turnover to asset ratio, that your assets are so much and your turnover is so little. So all those ratios will be seen. Okay. All of this, understand. So I told you the first stage is understanding the company. The second stage is collecting of the evidence, whether it is substantive tests. Sir, what do you mean by substantive tests? Whether substantive checking means detailed checking. We'll come to it when it comes ahead. And in the end, it is coming your audit report. Okay. So planning, you will see, the plan, how you plan to do it is, so if I have to write the meaning of the term audit plan is an outline to be followed while conducting an audit to ensure that it is efficient and effective. Sir, again, so audit plan, I could say, is a process. It is a process, or it is an outline containing the scope of the audit, the objectives of audit, the timings of the audit procedures, okay, that is to be followed. And why do you make a plan? We make a plan so that we ensure a structured outline to ensure that it is effectively and efficiently done. Audit is done properly. Okay. Now approach, audit approach. Now very simple stuff, not very important. Types of approach. Now imagine if I have to, there are two types of approach. One is system based reliance approach and the other one is your substantive approach. I had told you one word, that substantive checking means what? I want you all to put in the chat box. What does the word substantive checking mean? So substantive checking means detailed checking. Now when you will do detailed checking, when the company's internal controls are weak, when the company's internal systems, internal environment is very weak, you will do detailed checking. Okay. Then I will have to do detailed checking because the company doesn't have many systems in place. Whereas if I look at a digital company, I will rely, because a company like Netflix or a company like Swiggy, Zomato, or any other online company which is purely digital, everything is seen. So then I know that there is nothing wrong that can happen. So, and the internal controls are also very good. Means that automatically receipts are being generated. There is a proper audit trail of other transaction. Beautiful. McDonald's has everything set. So if the internal controls are good, then I don't have to do substantive checking. It reduces the extent of detailed checking. So this is the type of audit. So all this in the approach, you will look at the materiality, the risk, and the internal control. So one of the aspects I had already told you, that in planning I keep in mind what is the threshold limits, materiality, what all is the risk on the business, and one more aspect I will put in is the internal controls. So what systems company is currently using to control their environment, to control their operations, etc. Okay, and then efficiently and effectively we will see. Essentials of planning, just headings you can do, ensure that the audit is proper, everything is documented. Okay, evidence, it helps. You can review, you can form a conclusion, you can do it in training also. Okay, so just very simple. Developing the plan, you do a regular, you check the company business, you check the laws applicable, you set your objectives, set your materiality, set your risk levels, understand the internal control. Same thing is being repeated. Okay. Now there is a word called as professional skepticism. Okay. Now remember one thing, that professional skepticism is a very important word. I want you to quote it in your examination. Sir, what do you mean by the term professional skepticism? So professional skepticism means a QM. What does it mean? A QM. Your QM means a questioning mind. That anything is there, I ask. So as a professional, you don't have to believe everything that is brought before you. You are an auditor. You have to question everything. So that is a professional skepticism. Okay. So professional skepticism means a questioning mind. That is, you have to critically examine the evidence without bias. So without belief that they have told me, I will just take it on the face of it. No. So this professional skepticism helps you do a better audit and reduce the risk of giving wrong answers. Okay. Risk assessment is to be done, understanding the business, etc. Internal risk is there. Yeah. Now the same thing. Now risk component. So now we see that the risk on a business could be of three kinds. Okay. Risk while doing an audit. Now this is a risk for, they are telling three types of risk. So audit risk they are putting into three types. Okay. 1, 2, 3. There are multiple types of audit risk, but they are telling you three. Let's say about control risk. If there is a control, comes from the word internal control. You write the word internal control. So if a company has internal controls are weak, so obviously the mistakes can come. That is a risk. That your internal controls are not good, so it's a risk. And therefore the auditor has to be very careful, because if the company is not maintaining proper systems, don't have very good softwares, are not using very good technology, so it is a risk. Employees can do any kind of wrong. Second is, the third one is detection risk. Now detection risk means what? The auditor could not detect. The auditor could not detect. So this is one risk that is there. One is internal control failure or breakdown. The internal detection risk is the auditor could not detect errors, could not identify the errors. Obviously he must have not checked, missed out few transactions. And some inherent risk. Let's look at what they are. Very simple general stuff they are talking about. Audit risk. Okay. That the auditor risk means that the auditor presumes that, listen, there is some risk that is there when I take up the work. So audit risk means that the auditor knows that there is some kind of risk when he takes up the audit work. For example, if I am doing a very simple task. Okay, I am doing a very simple task of maybe making a document or preparing a document. There is very little risk. I can't land up in jail for making an agreement, a will. Okay, I'm making a contract, supplier agreement. Now there is less risk on me. But if I'm doing an audit, I'm taking money for doing an audit, there is a risk that I know that is always some risk on me. That uncertainty is there, that I might miss something and I might end up in jail, or I might be questioned by court of law. So the auditor, he still goes ahead with the audit, except that the risk is there that the opinion given by him might be wrong. Okay. Now only a very small degree of risk will be acceptable, otherwise it will lose its purpose. Inherent risk means inherent risk is the vulnerability of a class of transaction that is material, okay, assuming that there were no internal controls. If a company enters into frequent related party transactions without adequate documentation, there is a higher chance that those transactions might be misstated. Even if controls were in place later, the risk existed before the beginning, and this is called as inherent risk. So we will just remember this, that inherent risk is that certain classes of transactions are always risky. So you will write that Inherent risk means certain kinds of transactions are carry inherent risk. Carry inherent risk. Example, RPT, related party transactions always carry some amount of risk. So those needs to be checked. Okay. Now control risk is basically internal controls could not detect that you made a failure to file the form, etc. So that is another risk. And the third risk is that an auditor substantive procedures may not detect misstatement. So these are some of the risks that is there. So again, one risk is my substantive detail checking could not detect. One risk is control risk is the company's internal controls were weak, and the third risk is inherent. Some transactions carry inherent risk. Group funding, group structures, which are very risky. So they always contain some amount of vulnerability, doubt on the transactions. Okay. Now, information of the audit. Yeah, obviously when we do an audit, we look at the business, the structure, the size, the who all are the people involved, etc. Audit checklist is given where questions will be given. Okay. Now the illustration is given very simple. I don't think this can come in the game, but I'll give you what it is. So basically what they are saying, if a major, while doing the audit, if I find that there is a major non-conformity with the laws, if I find out that there is a major non-compliance, so obviously how will I react? I will tell that this is a major fraud or this is a major thing. I would immediately take corrective action. I will immediately take action, as compared to if I find that there is no misstatement but there is an opportunity of improvement. So I find a clean company, but I want to give them a suggestion that use a better software. Other companies are using better softwares, you're not using, so you follow the best practices. So I'll give a feedback. So immediate action is not needed, it's just a recommendation. And the third one is minor non-conformities, then I will give a corrective analysis, but I will not tell immediate action. So depending on the level of non-compliance, I will tell corrective action and immediate action is to be taken. For things which is just a recommendation, it is not a corrective action, it's just a feedback. Okay. Now, audit evidence. How do you collect evidence? I told you, we can collect evidence by scrutinizing the records and documents, by questionnaires, by third-party confirmations, by ratio, analytical procedures, where I see the various trends, whether it is good or bad, that will be seen, and testing, interviews, and analysis. So the auditor can interview the staff, review the procedures, etc. This is the methods of obtaining evidence. Common sense, na? How will you collect evidence? I will speak to people, I will do my own testing, I will see the records, I will ask questions, questionnaires will be given, a checklist will be given, third party confirmation. I will not talk to the company people, I'll talk to outsiders, and I will do some my own ratio analysis called as analytical procedures to identify unusual fluctuations. For example, if I find that the companies suddenly there has been a drop in sales, so my ratios will flag it. Okay. Or if I find that the companies any ratio which is very important is falling, the current liability ratio, current liabilities, your current assets upon current liability ratio is falling, so I will tell that this is wrong, something is going on, please keep in mind. Third party confirmation is external communication done, okay, in various things. So I'll try to verify significant related party transaction from third party. So what do you mean by third party confirmations? Confirmations from persons outside the organizations. Okay, this is taken for any purposes including related party transaction, etc. Okay, so again, analysis of audit evidence. So when I analyze the audit evidence, it is auditor shall evaluate the audit evidence to arrive at the audit conclusion. So the auditor shall evaluate the audit evidence to come to the conclusion. The conclusion is called as the audit report. So I will look whether now I have able to find out whether you complied with the laws or no, whether the audit is sufficient and appropriate or no, quantity, quality, as we discussed right in the start, all this will be checked. Okay, and then comes, so we are done with audit process, planning and collection of audit evidence, methods of audit evidence, and now we're seeing documentation. So documentation is nothing but working papers. What is a working paper? The audit evidence that has been collected will be documented in the file that is called as working papers. So working papers, so let's say if the auditor has taken a third party confirmation, he'll take a written confirmation, he will save it in his file. Any kind of checking he has done, vouchers he has checked, he will put a tick on that and he will save that vouchers. If the auditor has visited the godown, then from the godown person he will take a report, the signing of them that I had visited on so and so place. So all this will be part of the working papers. This is to be preserved by working papers. Is the it has to be clear, concise, chronologically given. It should be written who did what work. Okay, and it is all this will be preserved in a particular file. The board resolution, everything, appointment letter, engagement letter, everything will be given here. Okay, if he had taken third party opinions, that will come. Proof of compliance of laws. Okay, how did the audit plan, audit program will also be written. So the working papers come as evidence in court of law. So in case if something wrong goes on, it will be checked whether your audit document has been properly maintained or no. So whether it was well organized, etc. Okay. So this is very, very important. Okay, very, very important that the working papers has to be complete. It has the audit documentation overall, they're calling it as, instead of working papers. Audit documentation should be complete. Okay, should be clear, should be neat, should be easy reference where I will be able to locate that this is from HDFC Bank confirmation, which date. It should be relevant, it should be easy to review by anyone, and it should contain a audit trail. So audit trail means date, time, who referred, what they referred, everything will be given. Okay. Now audit documentation will be either a current file. Okay, current audit file. So now again the paperwork which is there is divided into two parts. So normally let's say your important documents will come in the static, and the current one is non-important, can come here. Let's see what it is. Okay, so your static means which does not change. So maybe something like MOA, AOA, appointment letter, resignation letter, audited financial statement, details about the company structure. This will remain static, right? So it does not change regularly. So this will be maintained in one file. So audit documentation can be segregated into static, something which doesn't change much, and something which keeps changing on a regular basis. So current file contains things which keep fluctuating, like the planning, the review points, the discussion. So you could just say simple, static will be in one and everything else will be in the second, called as current audit file. Both are maintained but separately, so it's easy. The static one I will touch upon much quicker. Okay, and records. How long should you maintain these records? So very, very simple. The audit record shall be collated and gathered within a period of 45 days. Okay, and should be preserved for 8 years from the signing of the report. So 45 days and 8 years. So very, very important that moment the audit is over, within 45 days, so all the thresholds you have to write it down. Within 45 days I will collect it. Collate means organize everything, my audit signing or audit report I have given. Now my working papers and my audit file, I'll start collecting it, maintaining it. Within 45 days I should complete it, and I have to preserve this for 8 years. So again, what they have given you, record keeping. The auditor shall establish policies and procedures for retention of the audit documentation. So I have to prepare a proper policy and procedures to retain these documents. audit document is essential for the following purpose. Why it is important? Legal matters, investigation, litigation, okay, to protect unnecessary expenses, and during so you can maintain it, to avoid liability, to keep the documents confidential and avoid leakages, so everything will be kept together. Now this is important that the audit document shall be collected, collated and gathered within 45 days from the date of signing of the audit report, and the audit document shall be maintained and preserved. So for 8 years I have to maintain it. With this we have completed the entire chapter again. Okay, so we started with a smile and now we can end with a smile also. Clear? Have you understood the chapter in the chat box? Yes or no? If you haven't not liked the video, please like the video now. Second, also share it in your WhatsApp group. Then we begin with the next chapter. Now I will take and complete the next chapter, which is your forming of the audit report. Okay, forming of this reporting. So I need some participation from you also, so I can knock off this my next chapter. Okay, which is the next chapter? Your forming of opinion and reporting. See, I told you it is in sequence only. This is the third one. So first, second, third, and all you have to quote in the exam. Everything which is important from exam point of view, I am discussing, explaining. Even if a person is sitting for first time, they will understand. Okay. So good to go. Can we start? Just give me. You've understood everything? Yes or no? Just one small little baby request. Do like the video. I know it just helps me. Okay, Ramya, thank you so much. Maroon, nice to have you. Aishwarya, Gautami, have you all understood in the chat box? So now I will take a 2-minute break again. 2-minute break. 2-minute break, and when we come back, we will knock off this chapter as well. 2 minutes, and we knock off this beautiful little chapter. Very, very simple, very, very easy, very, very important. From here, obviously, I'm covering everything. I've seen the past exam questions. I'm covering all of those, including from the module. You will be able to knock off from the module as well. So 2 minutes. In case if you want, you can enroll with a dream batch. You will get access to all of the lectures in depth. Now, we'll take a 2-minute break. We return back and complete this chapter. If you've not liked the video, it's a big crime. You might be arrested. Okay, and if you not shared it also, you might be arrested. Now remember, someone is asking, what about lesson 10? See, after I've taught you lesson 11, lesson 10 you will be able to do it, because it talks about same thing. It talks about audit principles, evidence collection only. See that you will be able to complete it. Okay, audit principles and techniques, and is very much similar to lesson number 11. Okay, now we'll be starting with the next chapter. So in 2 minutes we'll be starting and knocking it off. Okay, so guys, let me know in the chat box whether I'm audible and visible or no. Everyone in the chat box, whether I'm audible and visible. Let's see the contents of this chapter. Okay, so we'll be completing this chapter also and finishing it off. Okay, just seeing what all is covered. Then we will complete it. Okay. So everyone in the chat box, am I audible, visible, and we are GTG? Yes or no? Then we will sit and complete this entire chapter beautifully, including the past exam questions, what will come in your examination. You will see the module also, we are nicely knocking it off. Okay. So everyone, GTG in the chat box or a small little smiley is also enough. Okay, a small smiley or a heart. You know, in your chat box, you will see a small little heart also you can put up. That is also fine. Everyone. So we'll be starting and completing this chapter in the next half an hour, 45 minutes. Great. Ashwarya, great. Gautami, Ragi, nice. Let's start. Hi. So let's begin with your lesson, forming an opinion. Now this comes in the sequence of our standards issued by ICSI. So ICSI in total has issued 4 secretarial standards. The first one is about audit engagement. The second one is about process and documentation. The third one is what the chapter is about. That on basis of all the audit evidence, the auditor will give his report. That report is called as audit report or forming an opinion. Now what kind of reports can be formed, what kind of opinions can be given, we will be seeing. So first thing is how many kind of reports are there? Audit opinion can be only of these many kinds. So 2 categories, one is unmodified or a modified report. So first, audit opinion is the how do you say the audit opinion is the decision of the auditor. What does the opinion mean? Is the decision of auditor on basis of the audit evidence. That's his opinion, basis of the audit evidence. So either he can give an unmodified report or he'll give a modified report. Unmodified is a clean company, that the company has complied with the financial statements and there is no material misstatement. What is an unmodified opinion? Means the company is a clean company, it has no material misstatements and they have complied with all the applicable laws. The second category is called as modified opinion. Modified opinion has further subcategories. So what is a modified opinion? A modified opinion is where the company is not free from misstatements. So a modified opinion is where the company is not free from misstatements. It could either be 3 categories. So modified opinion could be 3 categories. qualified, disclaimer, adverse. It could be qualified, disclaimer, adverse. So 3 subcategories are there. Modified opinion could either be qualified, disclaimer or adverse. Adverse is where the company's financial statements are not reflecting true and it is gross misstatement and it is a cases of fraud. Qualified opinion is where the company has some non-compliances where the auditor will write the word subject to. What he will write? Subject to or qualifying. He will qualify few transactions. For example, the auditor can qualify 3 related party transactions. Apart from that, everything is a clean report. So qualified is a middle level, like everything is good except for these transactions. So you have to subject to or qualify, you have to put. And the third category is a disclaimer of opinion. A disclaimer of opinion is IDK, I don't know. So the auditor is unable to form an opinion. Either he was not given access or to the records, or any other reason he will say I don't know I cannot give an opinion whether it is good or bad because I was not given access to the particular thing. So essentially, if you go to see that audit opinions could be of how many kinds? 4 kinds. Audit opinion could be of 4 kinds. Clean report, unqualified. So how do you remember unqualified? Just remember no problem. No problem is an unqualified report. It could be qualified, mean there is some problem, subject to. Adverse is it is problem. Okay, so there is a negative opinion that the companies has gross material misstatements, and the fourth one is a disclaimer of opinion. All these three can be bottled down into unqualified report. Qualified report. This is what you need to know. So qualified report, they'll mention all these 3 subcategories. Let's start. So the ICSI has issued a standard called as CSAS, Company Secretary Auditing Standards 3. Okay. They tell you what do you mean by the opinion. Opinion means independent views of the auditor is called as a audit opinion. Okay. And it will be based on the audit evidence. Now they will repeat what I have said, that opinion types could be unqualified, unmodified. Unmodified is the best opinion where the auditor concludes. See the language how they're saying that here in this report the company says fantastic, auditor says it's fantastic. So where the auditor concludes that the affairs of the company are free from misstatements and they are in compliance of law. So he says free from misstatements and compliance of law. It's a clean report and compliance with all the laws. Whereas unmodified, I told you they will talk about how many subcategories? How many subcategories they will talk about? 3. Either it is all the 3 we have done. It could be qualified, it could be disclaimer, or it could be adverse. Here we say that there is misstatements, false, incorrect, misleading statements has been given, and it does not give a true and fair view of the company's position. Records, they are saying when he reviewed the records. So what are the records? Anything. Financial things it could be, or a non-financial. Financial could be books of accounts. Non-financial could be balance sheet. Non-financial could be MOA, any agreement he has seen, AOA, bylaws, etc., which were not complied with. Okay. When we also look at 2 things. So compliance, when we say compliance with laws means what? Compliance could be of 2 categories. One is compliance in terms of timelines, or it could be compliance in terms of process. So this is when I'm saying that it is in compliance means what? So I'll say either it is compliant with all the timelines. So where deadlines have been given, like MGT 7 has to be filed within 60 days of the AGM. It has been filed. So time limit has been completed. It is timely done. Compliance is timely done. Or if it was not done, it was delayed filing. So that will come here. I'll mention that non-compliance was done, delayed filing was made. And the other one is with respect to process. So maybe if you have got a foreign funding, then the filing of the entire process, board resolution, approvals, whether the process was followed or no. Like for example, when there is a change in registered office, so whether the procedure was followed and the forms were filed or no. Modified opinion, I told you 3 things we'll write. Modified opinion, it is where there is some problem. So either it could be So here they have said in the following cases, when there is non-compliance, there is a misstatement, okay, or disclaimer of opinion, where you didn't get enough evidence to make your opinion. You are unable to conclude due to lack of evidence. Similar thing they will rotate, okay. Let's see. So it doesn't make sense to go back into depth, but modified opinion could be qualified, adverse, and disclaimer. So modified means it will start with the word qualifying that or subject to. Okay, qualified opinion is where the auditor states that there are certain non-compliances, but not so grave, not so gross, not so deep to give it a adverse report. Whereas in adverse opinion, it is where the companies are not according to are grossly misstated. It is a case of fraud that is there. Disclaimer of opinion, very very simple, is where the auditor is unable to get sufficient and appropriate. So there are two words where you always have to write sufficiency and your appropriateness. So sufficient means quantity, this means quantity, and appropriate means quality. So if I didn't get evidence sufficient and appropriate, I cannot give my opinion. Maybe the management was not cooperating, or maybe the company did not maintain records only. So if you have not written a paper, what I'll check? So if a company did not maintain records, then what will check? So he says he cannot give any opinion at all. In the very 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 important, whenever you're giving a modified opinion, whenever you're giving a modified opinion, you have to write it in italics or bold. Very very important. Okay, so you will have to write in, you can see this is in italics or it will be in bold. So they will mention it somewhere, and you also have to give reasons. Okay, in our opinion, because of significant matters described in the basis of the modified opinion, we report as under. So the details will be given. Now, one important thing which is also a past exam question, which is called as emphasis of matter. Emphasis of matter is where the auditor wants to bring to the reader's perspective, reader's notice, a grave aspect. It is not a misstatement. It is nothing that wrong is happening. He just wants to take you to some important aspect. For example, if I want to show that, listen, the company is a beautiful company, it has beautifully complied with all the laws, but I want to emphasize that the company's turnover is reducing and has only a runway of 9 months, and after that it might shut down. If you go to see Vodafone Idea, they have told Supreme Court that they are compliant with company, but due to the business functioning, they are running into losses. Everything genuine, but they will not be able to function after 2026 2027. So they will become bankrupt if the trend follows. If they don't do any revival in their strategy, they might go bankrupt in the current trend. So this is the emphasis which I can bring, that listen, the loss continuously, if gone, company has so much capital, so they have a runway only of this much. Runway means a life of only so much. This could be one. Second could be that, listen, the business that you are doing is under threat. For example, if I am in the business of tell me one thing, one business, I want you all from the chat box, which will be taken over by AI, taken over by artificial intelligence, AI. So for example, if my business is primarily into content writing, so obviously content writers are now no longer might be useful, because lot of work has been done by AI tools. If I am into graphic designing, now there are so many tools which are coming that people can do it by themselves. So why will anyone hire a graphic designer? So any business which I feel is which I want to just tell the viewers that, listen, I'm auditing it, but according to me, I want to emphasize here. Okay, so that will become. or maybe there is a legal case that is going on. Obviously, it will not come in the balance sheet, but I want to bring to the notice that we have got some notice we have got. It is not a fine, but it is in the initial stages. So I'm just informing you. So how do you word it? It has come in the past exam question. December 2024 attempt, it has come. What is the emphasis of matter? So emphasis of matter is where the auditor wants to bring to the, what is the line? Attention of the reader. I want to bring to the attention of the reader certain instances, certain matters, okay, which might have a positive as well as negative impact on the company. So even if you are doing well, I can mention it that the company has grown in the ratios, it shows well. I can emphasize that. So whatever it is, it's open for the auditor to decide that matter. What will come in the, it will come in the heading emphasis of matter, and then the auditor will explain. Okay. So here the purpose of a UM is to draw the user's attention to matters already disclosed, but the auditor believes that it is fundamental to understanding of the report, of their report, or of their about the company's aspect, like legal uncertainty. If there is a new accounting standards that has come, new technology that should be brought in, so that also can be emphasized. Any regulatory changes that the company will have to do, or any major if thing which might affect the company's financial position. For example, if we saw a war between US and China can materially affect the company's tariff rates, anything can be mentioned in the ratios. Okay. Now we come to an important concept, another thing which can come in your exam, which is called as materiality. So how do you define materiality? So materiality is a threshold, or it is a figure, okay, where the reader will change his opinion, where the reader will change his opinion. So this will be mentioned in the audit plan. It will be mentioned what are the materiality levels. Okay, it is what will be the materiality level will differ from auditor to auditor, and it is a professional judgment of the auditor. So the materiality will be set. Maybe a 5 lakh misstatement is big for a small company, but it might be irrelevant for Tatas. So you have to see, it's a professional judgment depending on the size of the company, depending on the type, the business in which they are operating, etc. It will be disclosed, and one thing you have to remember, it has a inverse relationship with audit risk. So materiality and audit risk have an inverse relationship. So remember this, that this line, remember, materiality means nothing but seriousness. Okay, seriousness. Just remember this for the purpose of this point, that if the seriousness is high, seriousness is great, then the audit risk will be low. Risk of giving a wrong statement will be low, and vice versa. If we have less seriousness, now why there will be less seriousness? Maybe less time has been given, and it is a private, closely held company, or it is a cooperative society. So auditors do not take it that seriously as compared to a listed company. So in seriousness, materiality will be very high in case of listed companies, and that is why the audit risk will be lower there. Here they take very lightly all small companies, they make it do it very fast. So therefore the audit risk will be high. Audit risk is the means that the opinion given by the auditor is incorrect. Okay, so that is there. Nature of materiality, it is so some of the features of materiality, that it is a relative concept. So everyone will keep their thresholds according to what they feel. What is material for one, it is immaterial for other, etc. Okay. Now principles for auditors forming an opinion. So what is the principles for auditors forming an opinion? So let's see. So principles will be, first is completeness, second is objectiveness, third is contradictory process, and fourth is timelessness. First, let's go. Okay. The auditor shall consider the materiality while forming his opinion and adhere to principle of completeness. Okay, that he should gather sufficient and appropriate evidence to provide his basis. So evidence should be complete, investigation should be complete. Okay, you should check three things I told you: internal control, you will check the risk elements. Okay, risk things will be seen, internal controls will be seen. Okay, and all the other aspects will be seen. Second, while doing the audit, you will also maintain objectivity. Objectivity means professional skepticism. I told you, what is the word professional skepticism mean? Objectivity and professional skepticism means the same thing. Means a thinking mind, a questioning mind, that you will not, the auditor should not accept evidence without doing their own independent verification. Okay. Now, threats to objectivity. Threats to objectivity or professional skepticism. Professional. Now, what does professional skepticism mean? When you will not apply your mind, when you will be a little laid back. Okay. So, first thing is, if now obviously all this is prevented because when you read section 141 of Companies Act 2013, it talks about disqualification of auditors. So this they have just given you as a principle, but if you read section 141, all this cannot be done. So self-interest means what the auditor himself is interested into the project or the company, so it will affect his independence. It will affect his independent opinion making, okay, decision making. Second is, if he has to check his own, if the auditor has to check his own stuff which he had done. For example, he had given a if he had to review some of his own work, then he will not remove faults in it. That is called as self review threat, that he will not remove fault from his own thing. Now why own thing? He must have given some services, etc. So this is obviously not possible. I told you review 141, but they've just given you here that all these things can affect your independence, objectivity, skepticism, etc. Third, advocacy threat. Similar lines, if the auditor had given you a consultation and on basis of that you had drawn the structure, and today now if he is only made the auditor of your company, he will not remove fault because he had advised you on that matter. Familiarity and trust. If I am doing it of my own related party, my own brother, so all these things affect independence. Okay, but we know today all this is not possible since what? Okay, since we have your company law in place. Okay, now the thing is limitation. Should the auditor, if the appointing agency imposes a limitation on the auditor's work, okay, so the auditor, should he accept or not accept? We had done that. If any limitation is being put, so then they say first you should reject it. So now they are very nicely telling that you should first request the appointing agency to remove the limitation. That remove the limitation. Second, if they refuse to remove the limitation, then you should communicate the matter to the management and see if we can find another method to get the evidence. So we'll see if we can figure out any roundabout to get another evidence to solve it. If the auditor is unable to, they are not agreeing, then I will look that what will be the possible effects of the limitations. Okay, whether it is material, non-material, or whether they are asking me to modify my opinion. Okay, so if all this is there, then I might give a modified opinion or I might give a disclaimer of opinion. Okay. Now, if the auditor's inability to obtain sufficient and appropriate evidence, okay, if circumstances beyond the auditee, maybe there was a fire, the entire thing got destroyed. Okay, or there is a limitation imposed, they didn't allow me to enter into certain rooms, didn't give me access to certain files, so I will give a qualified opinion. That's it. Third party reporting, again same thing is, we had seen that two things. One is, if I need to call in experts, you can write, if I want to get experts, I can bring them, take their opinion. Second, if I feel that I am in this location, I cannot go, I can engage a third party. So if there is a geographical constraint, okay, then that can be looked into. And third party means any person who does not have a direct commission with the audit but whose inputs might influence the audit conclusion. Could be a customer, could be anyone. Okay. Okay. So the next thing is the auditor shall adhere to the following while forming an opinion based on a third party report or opinions. So maybe a customer, maybe an expert I have involved. For example, let me give you an example only. So let's say if I have visited the godown and I have seen it is diamonds, I want to bring an expert, a valuer to see, or a jeweler to see whether it is proper or not. So the auditor shall indicate the facts of use and shall also mention it in his report, what was his observation, findings, etc. Okay. Now we come to a concept called as management representation letter. Now what does the management representation letter mean? The auditor may obtain a management representation letter from the auditee on matters which are not capable of direct verification by the auditor. So for example, if I tell that, listen, I have got information from you, give me a representation, a assurance that the laws have been followed, that all the information supplied by you is correct. Because I cannot keep checking everything that you have also said. So I need some confirmations from the management also, something which I cannot always keep checking. For example, if the director has said he's a male, I will not go into detail. Okay, so some things I don't go. If the director has told me that this transaction has done, now everything I will not counter check. So some representation, some assurance I take from him. Okay, so the letter may be signed by the director, company, senior management who has a authority to issue. Format may be suggested by the company or they can make. The auditor can use this letter as a part of his audit evidence. However, obviously, he should take all the possible care and reasonable due diligence should be done by the auditor. Should not blindly believe what has been given. And they've given an example. Now, obviously, it is a letter, right? So, letter it will be done by whom? By the management to the company secretary. So, to company secretary XYZ, dear sir, this representation provided in connection with the audit. Okay, and we hereby confirm the following representation. The company has maintained the books of account, that we have complied with the law. There is no misstatement. We have we have not obtained any loan, etc. All these things, secure all the price and information, the laws, internal laws we had followed. Okay, the company has not employed any child. Everything they can take as some of the representation. The company does not deal in any hazardous substance, etc. Okay, and then after everything you enter into exit conference. Exit conference is the final thing. After that, everybody moves out. Means after the last, this comes at the end when you have had a word with the auditor and the management. After the evidence and everything, then they have a meeting and then they move ahead. So while concluding the audit, just by saying bye, the auditor should conduct a meeting with the management. The audit observations preferably should be shared. So he will say that this opinion I'm giving, last opportunity, do you want to tell anything? And then I'm giving my final opinion. Okay. And the format of the report, very, very, very important. Normally law prescribes a format. If it is not given, then a company can maintain its own format, or the company, the auditor can maintain his own format. So the report is always addressed to the appointing agency. Prerequisites of reporting. So the audit report should be accurate, should have a objective, means it should be impartial. Objective means professional skepticism or independence. It should be clear, concise, constructive. It should not be to demoralize. It should be in a way that it helps. It should be complete, timely. The report will be given and signed, and if it is a qualified report, then he will give with the qualification. The qualification I told you will be mandatorily in bold or italics. Okay, and that is it. We have completed the entire chapter importance from exam point of view. Thank you so much. Clear? Is this clear, everyone? Yes or no? In the chat box, or yes or no? Then we'll go ahead and complete the next chapter also. Okay, everyone. Now, is it clear? Yes or no? In the chat box. Everyone, can we move ahead to the next chapter? Our next chapter is very good. Gautami, great. Now we'll complete our next chapter. So whatever is important from exam point of view, I'm covering. Okay. Now we are going to see the next one. Gautami, Ashwarya, Ragi, great to have you all. Okay. Now we are doing the next one. Next chapter we'll knock off. Okay. If you go to see, we are in the last. So first leg is almost done. First leg is done. Okay. And now we'll be completing your secretarial audit. Secretarial audit is your CSAS 4. Okay. CAS 4. Good to go, everyone. Yes or no? Till here you all are enjoying, not enjoying, in the chat box. You are enjoying or not enjoying? So it gives me motivation, gives me happiness to complete, that I know that I'm going right. Yeah, I'm able to make you all understand. So we finished this, right? We finished the opinion part. Now we are going to the next one, secretarial audit. In the chat box, which is the chapter? Secretarial audit. Enjoying. Gautami, great. Ragi, great. Okay, great. Secretarial audit. Let's see. We'll see the contents of secretarial audit and then we'll complete it. It is really helpful. Thank you so much. Obviously, okay, I'm happy. But only thing is, you can help me by sharing it with your friends. This is all I request you all. Okay. Or don't you think there should be more viewership on this on this lecture? Yes or no? Check up the other things on YouTube. You will get that, my videos should be on top. Okay, Banu Priya, great. So let's see, we'll look at the headings and then we'll go to the next chapter. So we're looking at secretarial audit, what all is given. Okay, then we will be completing the chapter, that also. We'll just take a 5-minute break. Before that, we're just seeing what all is there in this chapter. I think this is a kind of a big chapter. Okay, but don't worry, I'll complete it also. Very, very simple chapter also. Hmm. Just looking through the contents that is there. Okay. What is this? Board processor. And then we are done. Okay. Great. So we get done. Hmm. Understood. Understood. Sure. Okay, so we'll be starting with secretarial audit. We will be completing in 2 minutes. We will start with secretarial audit also. Okay, till that I just require one request from you all. Please share it with your friends. Okay, and do like the video. Okay, so just small little baby request I'm having. Okay. Okay, Bhanupriya, great. Okay, so now we'll be starting with secretarial audit and we'll be completing this entire chapter also. Okay, and till then you can go through the entire chapter, go through the previous one. 2 minutes of 3 minutes break I'll take and I'll come back. Hi guys, am I audible and visible to all of you all? So we can quickly start and knock off this chapter in the chat box. Audible and visible, yes or no? Waiting for you all to respond. Waiting for you all to respond. Okay, Gautami is ready. What about others? Quickly, keep your fingers active. Tell me. Am I audible, visible? Are we excited? Can we start and knock off another chapter? Yes or no? Ashwarya, great. Gautami, great. Keep the same energy till the end. Okay. Let's begin. Hi. So we start with a chapter called as Secretarial Audit. Now, Secretarial Audit is one of the most important chapters for us, not only for the syllabus but also practically. Okay. So in your part B, this is one of the most important chapters, and we will be knocking it off. So now, Secretarial Audit is a audit. Audit means a verification, examination, scrutiny of the financial, non-financial records by an independent person, auditor. Only a company secretary, practicing company secretary, can do a secretarial audit. The provisions are contained out here. So your provisions are given under section 204 of the Companies Act, read with rule 9. Okay. And with respect to LODR, SEBI LODR, it is given in your regulation under UR is under regulation 24A. The secretarial audit report will be given in your MR3 report. Okay, so your secretarial audit report is given in MR3, and the auditing standards to be followed is CAAS4, and whatever auditor gives has to be reported under the board report. Okay, under the board report will be the secretarial audit report, and its comments are mentioned in the board report and has to be given. So all this I want you to quote. 204, remove 1 0, so 24A, MR3, CAS4, rule number 9 has to be done. Now, what is a secretarial audit? Obviously, a secretarial audit is an audit of the non-financial aspects of the company, where all the compliance of the laws are being checked along with the internal controls of the company. Okay, now we have, when we do an audit, secretarial audit, we ensure that the company has complied not only with the laws in letters but also in true spirit. That means you have not just followed for the sake of following, you have followed it in true spirit or not. Okay. A secretarial audit is an independent assurance. Okay. Independent body, independent person can only do an audit. Okay. Checking whether the company has followed with the laws or no. So we've given all these thresholds: 204, Rule 9, Regulation 24A of SEBI LODR. And when you go to Regulation 24A, they talk not only about secretarial audit. Normally, we will only get stuck up with secretarial audit. They talk about annual secretarial compliance report also. This is a separate report and separate formatting of method has been given there. We'll see secretarial audit 24A for listed companies and even annual secretarial compliance report. So it's a compliance report which also company secretary gives. It's annually given, but it is specific to SEBI laws. It is specific to SEBI laws. This is general compliance with all the company, all the laws, etc. Okay. So now when we say, the very first thing you should know that your secretarial audit is under section 204 of the Companies Act. Now 204 everybody says, but do you know how many subsections are there? There are 4 subsections. Each subsection we will see. 2041, 2042, subsection 1, 2, 3, 4. Subsection 1 says which all companies need to get a secretarial audit done. Second is, while doing the audit, it is a duty of the management to assist the company secretary and give support to the company secretary. So the company has to support the company secretary. Only then we will be able to do a proper audit. Third talks about section 134 subsection 3 that the secretarial audit report and its comments has to be forming a part of the board report. And fourth, if you don't comply, you get a penalty. So we'll remember these subsections also. Okay, so eligibility. Which all companies need to do a sectoral audit? Can anyone tell me? Okay, which all companies? Now this is given a evolution. So during my exam time, I used to write section 383A. So this was under Companies Act 1956. So evolution. Okay, now it is over. Now we have Companies Act 2013. Okay, and 204. So now when we come to this section 204, I told you number one is eligibility. So remember the word 50 to 50, 100. What you'll remember? 50 to 50, 100. What you'll remember? 50 to 50, 100. That a company having a paid up capital of 50 crores or more. Every listed company has to do. So MR3 is a form number every listed company has to do. Now only public company having a paid up capital of 50 crores or more has to do. Public company having a turnover of 250 crores or more has to do. And every company. So this is a wider scope. Every company having a loan or borrowing of 100 crores or more. So again, what is the thresholds? What are the thresholds quickly? Section 204 subsection 1 talks about companies or eligibility requirement, eligibility to do secretarial audit. Sir has taught me 3 figures. First is I have told you all listed companies, okay, and this is read with rule 9, rule number 9. In rule 9, what is written? That this report will be in MR3. Okay, so all listed companies have to do, and then I told you 3 numbers. What were the 3 numbers? 50, 250 and 100. Okay, and 100. So 50 crores paid up capital, turnover of 250 crores and loan of 100 crores or more. And this is for all companies, and these two are for only public companies, Concept clear till now? If you have understood, smash the like button. Okay. So this is good. The second section number 204 subsection 2 says that you have to give an assistant to the company secretary. So the duty of the company is to assist the company secretary so that we can do a audit properly. Subsection 3 says that the disclosure should be there and explain if we have got any qualification, if the company secretary has given any qualification or they have highlighted anything in bold italics. It is a duty of the board of directors to give justification to that thing. And the fourth one is about penalty. If anyone doesn't comply, you get a penalty of rupees 2 lakhs. Okay. Now, voluntary secretary audit. Now, we have always learned one thing, that anything which law has not told you and you're voluntarily doing it, then obviously the requirements of law need not follow, because you are not supposed to do it only. If you don't do it properly, it doesn't care only. So, if you are doing a voluntary secretarial audit, then you don't have to comply with any of the particular regulation, CAS 4, nothing you have to do. So, companies not mandatorily can still opt for it. However, they are not mandatory to follow the regulations that is there. Now remember one thing, whenever they give you the need of secretarial audit, whenever they give you the objectives of secretarial audit, whenever they give you, multiple things will come. That why are we doing a secretarial audit? So that we get a compliance of laws, the company manages the risk properly, it gives good corporate governance, we can identify the risk, stakeholders will get confident, we can prevent the fraud, prevent frauds and errors, detect and prevent frauds and errors. Okay, it is a legal requirement, that is why we have to do it. Improve internal efficiency. So when we secretarial audit, we will highlight certain things and it will improve the company's internal things. Okay, so secretarial audit as a tool for good corporate governance, same benefits we will write. Okay, ensuring good corporate governance, laws will be followed, similar points it is there, headings we can do and close. Objectives also same, similar points will be verification of compliance, it will help in good corporate governance, you will be able to identify and comply with the laws. Okay, it will evaluate whether the board is doing a good job, it will help you assessment of related party transactions, you can detect and prevent frauds and errors, you can recommend remedial measures, and it increases stakeholders' confidence. Okay, now this secretarial audit, and I told you, now we are doing SEBI LODR. So we finished Companies Act 2013 section 1, 2, 3, 4. Yes or no? Yes or no? Now we are doing SEBI LODR. So SEBI LODR is one thing which Mr. Kotak had told. Okay, it started from Mr. Kotak. They're going into the history. Okay, and they has told, and in the end, we have, okay, this is a history. Directly come to the regulation 24A. So it says that you need to, okay, so one thing 24A needs to be complied. Now this is one thing. This is important. Okay, what does 24A say? What does regulation 24A of SEBI LODR 2015 talk about? So they say that you have to get a sectoral audit, and you need to get one thing is ASCR. I told you in the start, remember, annual secretarial compliance report. Within how many days? All this has to be given within 60 days from end of financial year. So this reporting, both these reports has to be given. Secretarial audit has to be given in normal time. ASCR has to be given in how many time limit? Quickly. So within 2 months, that is 60 days from end of financial year. Clear? And this regulation 24A is mostly about the SEBI laws, adherence to the SEBI laws, regulations, circulars. Okay. So scope of sectoral audit is everything, and scope of that annual compliance report is about SEBI laws, regulations and circulars only. Okay, so ASCR is about broad checklist on compliance with SEBI laws. Clear? Okay, so same thing. Now they have told who don't have to do. So they have told that under regulation 15, they have exempted certain companies. So our scope reduces here. That was small companies. You will see small companies, or I could say those who are SME companies. Just remember the term. Small and medium exchange, SME companies don't have to get comply with all these law, with all this compliance, secretarial audit or the ASCR. So if their net worth is up to 25 crores or they are SME, they don't need to do. If their paid up capital not exceeding, so PUC is max 10 crores or their net worth is max to 25 crores, they're too small to get all this done, and we are also too big to do such audit on such small companies. We don't care. So SME companies or this, so both of them, the limits are the same. SME companies are up to this limit only. So this is what they are saying. Okay, that regulation 25(2)(b) says all those companies listed on the SME stock exchange don't need to do this thing. As it is, we also don't want to do them. They're too small. Okay, done. Now which is the, so we did section 204. We did regulation 24A, and now we are doing CAAS4. What is CSEET? It talks about auditing standards and AS4. Now everything will be repeated. We have done everything. It will just be repeated. So if you see, chapter is over. Now they'll just repeat the same thing what we have done. 204, 24A. Okay. If it is not mandatory for which companies? Either it is coming in the regulation 2015, 2B, 2A, SME, they don't have to do. And if it is a voluntary sectoral audit, they don't need to comply with any of the regulations, rules, because it is voluntary. If company is voluntary picking up a sectoral audit, they don't need to comply with the standard. Okay, but however, it is recommended that they should do. Now remember one thing, that whenever we are doing a sectoral audit, which standard it is, all of you all in the chat box, which is the standard for sectoral audit to be followed? So you will say CAAS4, but for engagement letter, which you'll do CAAS1. For the process and documentation audit evidence is CAAS2. Okay, and when we give an audit report, we will also follow a CAAS3. So obviously when we are doing sectoral standard, don't say that we just have to follow CAAS4. We also have to comply, must also follow CAAS 1 to 3 now, logic. So write that also. Concept, importance of sectoral audit, same thing we'll write. Okay, it is a tool for risk mitigation, helps strengthen the internal controls, detect frauds and errors, regulatory, it prevents us from regulatory action, prevents failure to, it will highlight failure of any kind of non-compliance with anything. It will highlight environmental laws, non-keeping of records, etc. Okay. Now advantages, same points will write, better compliance, same thing, objectives of secretarial audit, benefits, will help us follow the law, protects the interest of stakeholders, enhances our quality, etc. Okay. Audit audience, now this is very stupid stuff, but still, who is the audit audience? So one will be the auditor, he will be interacting with promoter, with the director, with the investors, with the stakeholders. So these are the audit audience who gets affected or involved in a audit process. Now we are seeing risk of secretarial auditor. So risk one I have already told you with the subsection. Okay, you have to tell me in the chat box which is the subsection for penal provision, that as a secretarial auditor, if I am very lenient, if I am very ignorant, if I am not, what is the opposite of diligent? If I am not diligent, okay, then what is the risk to me? So they are talking about the penalty on, this is about penalty on secretarial auditors. So first thing is section 204 subsection 4, liable to penalty of 2 lakh rupees. And also you'll remember that penalty under section 143. Remember I told you 143 quickly, 143 subsection 12. If you don't report fraud, then obviously you can also be having a penalty of 5 lakh rupees. Next is 447, 448, a short exam question. You have to write it in the exam, that 448 defines fraud. It says if I give a false statement knowing it to be false, or I omit a material statement knowing it to be material, means there is an intention of giving a false statement. So I give a false statement knowing it to be false, or I omit a material statement knowing it to be material. So it shows that I have done something wrong. So penalty is given in 447. Okay, 447 says how much years penalty you will get. Not less than 6 months. So 6 months or definitely you will be in jail, which may be up till 10 years. You can learn the punishment also. Very, very important. And if you keep doing it again and came out of jail and again you did it, so repeated offense, then within a period of 3 years, if you repeat your mistake, you will get fine will become double and imprisonment will definitely be given. Now apart from that, now we did the penal provision, we are not done yet. Disciplinary action can also be taken against you. Disciplinary action will be taken under CS Company Secretary Act 1980, where they say that under section 21C of the CS Act, 21C is what? Of which act? Company Secretary Act. Okay, if I do something wrong, I am found guilty, I have given some misstatement, so the council disciplinary committee can give 3 things. They can reprimand, remove, or impose a fine up till 5 lakh rupees. So reprimand means they can shout at you, they can punish you. Second, they can remove your name as a company secretary only. Okay, and third, they can put a fine on you also. Crazy stuff. Yes or no? And code of conduct. Code of conduct is basically how you have to behave. Code of conduct for auditors will be the same. Impartial, I have to have professional skepticism. Okay, it's like a soft skill. Code of conduct is the standards that I have to follow. The behavior, demeanor towards my client, towards the profession, etc. So let's see what all they'll give you. All ethical principles they'll give you. Integrity, independence, competent, objectivity means professional skepticism or independence, ethical behavior. These are the principles that I will be guided by. These are the ethical principles I will be guided by. Compliance with ethical standards, etc. Now, scope of company secretary. What is the scope of secretarial audit? Means what all will I check during a secretarial audit? So I'll tell you very, very simple. In your executive, which all laws you learnt? In your SEBI syllabus, which all laws were there? Companies Act 2013 was there, yes. Then in SEBI laws, what was there? SCRA Act. In your EBCL, ECIPL, you had the FEMA law, insider trading. All these laws, whichever you studied, you will be checking. Okay. Other areas you need to check, obviously, with respect to the board of directors. Okay, whether the board was formed as per section 149, independent director, women director, resident director, board meetings were held as per 179 or no. Okay, just a second. Now we'll talk about the process of appointing a secretarial auditor. Process of appointing secretarial auditor. Okay. So very simple. When an auditor is appointed, what is the process? So very first thing is, moment a secretarial audit is a check of the compliance of the laws, to check whether the company has functioned as per the lawful way. Now what is the process? First we appoint the auditor. Okay, secretarial auditor will be appointed. Who is the appointing agency? In the chat box, who is the appointing authority? It is only through the board meeting, or BOD appoints. BOD appoints secretarial auditor. Done. Moment you are appointed, and the secretarial auditor will be appointed under section 179, that is the powers of the board, and it cannot be delegated, it cannot be done through circulation. Proper convene board meeting, we have to appoint a secretarial auditor. Okay. Second, moment you come, it is your duty to speak to the incumbent secretarial auditor. To the previous auditor, my duty to speak to them. And is it mandatory? Answer is yes, it is mandatory. As per the ICSI guidelines, you have to give a proper letter that as per schedule 1 of the Company Secretaries Act, I have been appointed. Okay. And you have to wait for 7 days. Only after that you can take up the assignment. Okay. Now this is done mandatory before accepting the assignment. So moment I know that everything is finalized, I'll give a letter. After 7 days, I will go ahead and sign my appointment letter. Okay. Then I would be appointed. I'll sign. Okay. Then comes, now I will start doing my audit. Now so I've just been appointed. Now I will do a preliminary meeting. I will ensure that CAS 1 and CAS 2 is followed. So CAS 1 is engagement letter is done properly. Audit evidence is collected properly. Preliminary meetings. I will check the scope, and in the end, the evidence will be collected. I'll do the field work, go to the company's office, go to the godowns, check the internal controls, then do my testing, etc. This is all till CAS 3 only. Okay, field work, etc. And then comes the working paper, file and opinion. Okay, so all of this is the working paper is the work done by the auditor has to be maintained. He will summarize all his findings and then prepare a report, and the report will be in MR3. And you have to also you have to follow which company secretary auditing standards 3 also has to be followed. It's for the audit opinion. And obviously as per rule 9 read with section 204 subsection 1, your secretarial audit report will be submitted. Okay, and you have to follow the standard 4 also. Okay. Now identification of the laws. So the first job is to identify that what the company does and which laws are applicable on them, and then I will start looking at the laws. Now laws could be of 2 categories: industry specific laws and general laws. General law is a company law, is a general law. Tax is a general law. You could say labor law is a general law. Specific law could be maybe you're an insurance company, so I'll say Insurance Act. Banking company has a Banking Regulation Act. If you are maybe into coal, then a particular I have to see that particular act also. Okay, petroleum sector, industrial, pharmaceutical, cement, I will check that. Okay, you will check all the laws. Okay, you will verify whether the company has complied with all the laws. You will see, and while verification whether company has complied with the laws or no. First thing, general laws I will see. General law is, did they have the board meeting as per law? Specific law, maybe in Petroleum Act, if they've told something, then I will check that. And events, if the company has done a takeover, if they've done a merger, if they've done a what other events can happen. All your company law chapters, issue of shares, dividend, okay, all of those. So all these things will be checked, whether appointment of KMP was done properly, Okay, agenda, minutes, all these things are done properly or no. You will verify the compliance. Simple. Then comes, while checking, I will look at a board composition. Now, board composition, very important, is given under which section of Companies Act? Now, remember, when you read section 149, subsection 1 to 3, okay, one says minimum number of directors, maximum number of directors, whether you complied, the company complied, whether the women director was appointed, and whether the resident director was appointed. Okay, this needs to be seen. Now, when you go to see that women director specific, okay, very important from exam point of view. Note it down, okay. Now, this is as very important. That women director is given under section 149, subsection 1, read with rule 3 of the company's appointment and qualification of director rules 2014. They say that whether who has to appoint women director. So every listed company and every 100, 300. What you'll remember, 100, 300. Every public company having paid up capital of 100 and turnover of 300 crores. They have to mandatorily appoint. Resident director has to be appointed. Independent director has to be appointed, where at least 1/3 of the total number of directors should be independent director. This is very basic. You should know this. Now, one thing which I don't think you will know or you might not remember, but extremely important, very important. This is for SEBI LODR, listed companies. That they have told that, this one, top 1000 listed companies need to appoint an independent women director. Okay, which companies? Top 1000 companies have to appoint a independent women director. So please note it down. This you need to write. They can ask you. And second important thing that you have to remember for composition of board is top 2000 listed companies should have at least 6 directors. Top 2000 listed companies have to have at least 6 directors. So minimum directors, if I ask you, everybody says 3 directors. Public company should have 3 directors. No. If it is a top listed 2000 companies, if it is a top, so there are over 10,000 listed companies. But in the top 2000, if you are there, then you have to maintain 6 directors. So minimum directors are minimum 6 directors have to be appointed, and which all? Top 2000 listed companies. So this I want you to remember. So these two things are very important, both. Okay, which two? One is, note it down, write it somewhere. Okay, that your independent women director and your minimum number of directors. Clear? That's it. Then there is a concept which is asked in the last exam only. They had asked something called the NSE prime. Sir, what is NSE prime? Okay, so NSE prime is basically a kind of a voluntary adoption of governance standards which are stricter than those mandated by law. So NSE prime is something where you want to follow corporate governance more than what is given in law. So you say that I am ready to opt for NSE prime. It's like a very premium kind of corporate governance I'm ready to follow. It is voluntarily done. Okay, where some of them is basically minimum number you are ready to appoint. Examples of some of the requirements under NSE prime. So companies like Tata, who as it is follow more than law, they can go on NSE prime. Okay, so here it will help you get more transparency, accountability, better stakeholders confidence. Okay, so key provisions given under NSE prime. Okay, so the board of directors minimum 8 directors. Normally we have only 6, but here they're saying minimum 8 directors you have to have. So anyone, if my company I'm having lot of things that I can comply with more laws, I'll go into NSE prime. Minimum 8 directors have to appoint. Chairman should not be related to MD, CEO. Okay, more than half of the board shall comprise of independent directors. I will appoint 2 women directors. Now, is it mandatory? Answer is no. I will primarily opt for this. Now listen, I want to follow this extra compliance. So then you can opt. So you can show off in front of investors etc., that I am following the prime mode. Okay. Now remember this, I want you to quote. While checking as a secretarial audit, I will also check whether you have formed the committees. Okay, audit committee, nomination remuneration committee, stakeholders grievance committee, CSR committee, and risk management committee. So if you go to see, audit committee is given under which section of Companies Act? Section 177, 178 is about nomination remuneration. 135 is CSR committee, and when you go in LODR 18, 19, 20 and 21 is risk management. I'll make you learn in 2 minutes. So you have to remember answer ANS risk. So risk management committee, then this is stakeholders grievance committee, this is nomination committee, and this is audit committee. Okay, remember this answer risk. Now remember this regulation number 18, 19, 20, 21. This is the regulation. Okay, stakeholders grievance committee. And you can also remember 17, which talks about BOD, board of directors. So this is of SEBI LODR regulation. I want you to quote this in your exam. In addition, if you see section 135 is about CSR committee. So all these committees we'll see whether you have formulated it properly or not. Okay, in your audit. Then systems and processes. So I'll see whether all the systems are in place, internal controls are there, whether the procedures are followed. Okay, actions and procedures are proper or no. You will verify everything. Then comes detection of frauds. Very, very, very important part. Okay, very, very, very important from a company secretary point of view. That while company secretaries are auditors, they are auditors. So while doing the audit under section 143 subsection 12, it talks about detection of fraud. Moment we detect a fraud, we have to behave in a certain way. ADT4, we have to report it in ADT4. ADT4 is about reporting of fraud. But there are some thresholds. If whom I will report and what, let me show you. Okay. So we are seeing the reporting of fraud. So very, very important. You can take a note of this. Okay. So which section talks about reporting of fraud? Section 12, 114 subsection 12 read with rule 13 talks about reporting of fraud. Okay. So normally it depends on the fraud amount. If the fraud amount is 1 crore or more, or if the fraud is less than 1 crore. Less than 1 crore, I'll just inform BOD and audit committee, and then the BOD will mention it in the board report. If the fraud is more, then obviously I will inform board of directors and audit committee, and additionally I also have to inform the central government if it is more than 1 crore. Now there are some days. First, moment the auditor detects a fraud, within 2 days he has to inform BOD that listen, I feel that this is the fraud. Give me justification about this transaction. I think you have not only complied, you have tried to with the intention to deceive, you have done this entire transaction. So 2 days, within 2 days of the knowledge of the fraud, the company secretary will inform the BOD. The BOD gets 45 days to reply. And once 45 days is over, okay, and let's say on the 45th day they have responded, in the next 15 days I will inform the central government if the fraud is greater than 1 crore rupees. So if you go to see the thresholds, 2 days, 45 days, 15 days. So within 2 days of the knowledge of the fraud, I will inform the BOD. BOD gets 45 days to reply. Once they reply, then in the next 15 days, it's my job to inform central government. So if you add, what is the total figure? 45 plus 15 is 60. So in total 60 days, the matter goes to central government. Right? So again, if I repeat, if the fraud amount is up to 1 CR, you will inform BOD and audit committee. But if the fraud is greater than 1 crore, then you will inform BOD and audit committee and central government. Concept clear? Yes or no? This is about this reporting of fraud. Okay, so we'll report rule number 13. All I've given you, 60 days, non-compliance, okay, everything. So this entire concept is only over. Okay, procedure of reporting the fraud, I've given you the full procedure. 2 days, 1 day, 45 days, all the thresholds are covered, and obviously you will inform in ADT 4. Okay, who is the auditor? Reporting, obviously. Now one concept comes, fraud versus non-compliance. See, in fraud there's an intention to deceive, there is an intentional concealment, there's an intentional omission, there's an intentional perversion of truth, diversion of truth, hiding of truth. So that is a fraud. Why would you do a fraud? To cause loss to others, or to get a wrongful gain, or to induce someone to sign or surrender their legal right. Whereas non-compliance is a failure to comply with the laws without any intention. Clear? In fraud, in non-compliance is a failure to comply with the laws. Okay, maybe you're not able to adhere to the time limit. Non-compliance done with intention is fraud. Okay, so these are the events where fraud could be done. So they are just telling you that the secretarial auditor shall identify and report various events which may have a bearing on the company's laws. Duty of the auditor is to report all the events which can affect the auditor's affairs. So these big events, M&A, issuing of shares, okay, related party transactions, merger, revision of rating, anything like this will give a hint that fraud is going on, or it could be there, which have to study deeply. That's it. Impact of audit report, obviously importance of secretarial auditors for investors and stakeholders. Now obviously it has a very great impact. The investors will be able to take an informed decision, okay, whether to invest or not invest. Then you can write the benefits of secretarial audit. We have already done. Goodwill, if the company is done really well, then goodwill will be there. It's a risk management tool. Level of confidence of the investors will be there. Compliance with the check will be there, and then the format of secretarial audit has been given. Now if you remember, section 204 subsection 1 read with rule 9 of the appointment and managerial rules 2014 is given. Now this is the report by the company secretary to the shareholders, to the members of XYZ company. We have concluded a secretarial audit and audit of the compliance of the laws, etc., and we report as under that the laws have been followed, all this has been adhered to, and we have duly checked the composition of the board, all the internal controls are in place, and we sign along with our membership number. Okay, now this is with a report with respect to the I told you, annual secretarial compliance report. Similar thing, but you will see only with respect to SEBI things will be written. SCRA, SEBI Act, SEBI, all those things only as SEBI circulars, etc. is given. And with this, I have completed this massive chapter which is there, which is called as Secretarial Audit. Thank you. Yes or no? Everyone, if you like the video till now, I request you all, like the video and share it with your friends as well. Covered everything, including what can come in the exam, all the provisions, everything has been stated. Clear till here, everyone? Yes or no? Till now, you all are enjoying the lecture, yes or no? I want a response from you whether you all are enjoying the lecture, yes or no. So then it gives me encouragement to take more such chapters and knock it off. Yes or no, everyone? Waiting for you all to respond in the chat box. Then I'll look which chapter to take and complete. Great. Gautami, Ashwarya, great. What about others? Okay, great. Okay, so now I'll look at one more chapter. So we've completed how many chapters? 1, 2, 3, 4, 5 chapters covered beautifully. 5 chapters covered. Okay, I can take audit principles and techniques and also cover it off. I need a message from you all in the chat box. Okay, so now that we've covered this, I think I'll take up one chapter which is called as another part I will complete. Now the first part is done. You see more or less the full chapter, the full segment will be about this only. Now I will, after the lecture, I'll start with the second part, which is your due diligence. Which is your due diligence part 2. I will take and complete part 2. Okay, so we will take a short break. We will take a break. Maybe we'll meet after some time and we'll come and we'll complete this chapter also. So maybe we can take a 15 minutes break and then we come with due diligence and complete it. Due diligence and we complete this chapter. Clear? So this is another important chapter. Audit, I believe now all the topics of audit which you will see, you will be competent to build an answer. Okay, we have covered all those things where sections etc. has been given. Now I'll start with due diligence. Okay, so we'll take a break of 15 minutes. 15 minutes break and then we come and we complete due diligence. Complete due diligence. Okay, till now if you not like the video, go ahead and like it. Ramya. Okay, sir, please also cover 14, 15, 16. Okay, 15, 16 I am covering. 16 I am covering. Okay, I am covering your due diligence. So we'll take a break and then we'll return back. So what's the time now? 9:10. So we can return by 9:30 p.m. Okay. Till then, please share it in one of your WhatsApp groups. Okay. Now please let me know in the chat box if I'm audible and visible. Okay. So now we will start this particular chapter and beautifully cover it also. Okay. Now am I audible and visible? Waiting for all of y'all in the chat box. So whatever I'll be touching upon are the important things that come in the exam. What doesn't come in the exam, we can quickly move ahead. Okay. Great. Banu Priya is great. Ready? Okay. Thanks. Aishwarya, ready. Gautami. Okay. So let me know. And if you have not liked the video, like the video also. Let's begin. Let's start. Okay. Hi. So now we begin with a chapter called as due diligence. Let's understand the meaning of the term due diligence. Due diligence is nothing but an investigation or a verification or a examination, okay, or a scrutiny of the affairs of a company, Here you could check, it's a check, okay, check, scrutiny, etc. of the affairs of the company, where you will check not only financial aspects, you will also check non-financial aspects like your business aspects. How is due diligence different from a audit? Because audit is also a check, verification, etc. Here in due diligence, it is done generally prior to a transaction. For example, if a M&A is there, you would want to check the other company whether they have complied the laws or not. In audit is normally given by law. It is done by an auditor. Qualification of auditor is given. It is more about a historical checking. Whereas due diligence is a checking done with a prospective in mind, that we are whether we should do the deal or we shouldn't do, whether we will get the investment if we are making, whether it will give a good return on investment or no. So a due diligence is nothing but a background check on the company prior to a transaction. Okay, so it's similar to audit. Audit is about mostly financial. Here it is about business aspect, operations, etc. The main objective of it is to uncover hidden risk. And there is a concept which is called as caveat-emptor. This entire thing comes from caveat-emptor, which talks about let the buyer be aware. So what happens is when a company is there, it is going to buy another company. So this is a buyer company. It is planning to buy out the target or seller company. So the buyer company would do a due diligence on the seller company. That's it. Okay. So let's see. What are we doing? We are doing an investigation, scrutiny, etc. prior to a transaction. We'll check all the necessary things so that we can take an informed investment decision. You gather all the information about the target company to know what price to give. In case if we find errors, then we will say, listen, this whole error is there. We will reduce your valuation and accordingly we will buy the company. Okay. So it is a method of risk management for the buyer company prior to a transaction. It covers all the background check. You do a background check before buying the company. Okay. So it is done pre-transactions, etc. Now, objectives of due diligence. Why would you do a due diligence? Obviously, if I go to buy even shoes, I will check the shoes, whether they are comfortable, whether it is worth my money. So now when you're going to buy companies, you would want to see if there is any important matters that is not covered. I would do a SWOT analysis. You would do a SWOT analysis, strength, weakness, opportunities, threats. I would want to do a due diligence or checking to see whether it is a good investment decision, whether I'm getting my return on investment or no. It gives you security. It will give me mental peace whether I should move ahead with the transaction. Shareholders' confidence, and we can collect as much data as possible. So SWOT analysis is one important thing. Now to do this due diligence, we will have to enter into a confidentiality agreement or a NDA. When I am doing a due diligence, you are sharing all the information because you are interested in selling the company. So now you will share all important information. So you will enter into a NDA with me, where I will come to it, tell you the entire process also. The entire due diligence purpose we do is to determine the purchase consideration, the buyer, the purchase price, what I should fix. If I find errors, non-compliances, or hidden risk, I will renegotiate or cancel my transaction. Simple. Okay. So prior to any kind of transaction, whether you do business collaboration, M&A, partnership, JV, you do a check onto the other side. Okay. Now, need for due diligence, we've already seen to uncover hidden risks, to do a SWOT analysis, to investigate the investment opportunity, etc. Scope of due diligence, what all will you check? So obviously legal, financial, business, all aspects I will check depending on what the situation demands. Okay, so it is all transaction based. The scope depends on the transaction type and the parties. Parties will decide what all they want to check. For example, they can do a tax due diligence only. So they can only check the taxation, whether it is paid properly, etc. I could do a legal due diligence. A legal due diligence only a check of the particular legal aspects. I can do a intellectual property due diligence, checking whether the IP has been in place or not. Advantages, objectives, everything of the due diligence remains the same, like uncovering the risk, etc. Okay, factors to be kept in mind. Just general, you can have an overview. What all things I will keep in mind. Okay, what is the purpose? Why am I doing this due diligence? You should know. Second, it is a tool for risk management. Okay. Objectives, you have to plan it out, you have to negotiate more time, try to get more time, because to do a checking you require enough time. You would try to double check certain financial things, do a background test on the promoters, etc. Or you would try to speak to customers, vendors, third parties. Okay, and you will report in, you will also prepare, like how in audit you prepare an audit report, here you will prepare a due diligence report. Okay, and in the due diligence report, obviously you will report only things which matter. Okay, that is a factual thing. Now, challenges in due diligence. Normally, when I'm doing a due diligence, someone says you have very little time, so it becomes a hindrance, challenge, obstacle, disadvantage of due diligence. Sometimes non-availability of information. The seller company is not sharing information. Third is non-cooperation from the employees. Employees are not supporting, not sharing information. This could be some of the problem. Now, I'll tell you the process of due diligence. Everything will get clear. So, due diligence, when you start, the very important, okay, process of DD. So when there is a seller company and there is a buyer company, okay, so there is a buyer company and there is a seller company. So now the buyer company will come and tell the seller company, they will give a letter of intent. They will give a letter of intent. What is a letter of intent? That I intend to buy your company. So the seller company says, okay, fine, this guy will give me so much money, I'm interested in selling. So I will say, okay, fine, but I will give you whatever information you ask about my company. Since you're buying my company, you would want to know more details. I will share, but enter into a NDA, non-disclosure agreement, or a confidentiality clause. Confidentiality agreement, enter. I say, okay, fine, I'll enter into a confidentiality agreement. Then third, we will say we'll hire an agent. We'll hire a company secretary, because buyer company will not do the due diligence. They will hire a PCS or a due diligence team. They will do the due diligence. So they will also have to enter into a NDA. Okay, and then they will prepare a. After this, then the NDA team will give the DD report. Then after I get the due diligence report, then I will renegotiate. Okay, basically if I find errors, I might not do the deal. So we'll see what all is there. Okay, so very simple. Process is pre-diligence. Before the checking, letter of intent, NDA is done, then data is collected and a In due diligence, you will do all the checking, evidence collection, prepare a due diligence report, and post diligence we will renegotiate and we will try to rectify all the errors that were there. Okay, pre-diligence, letter of intent is signed, confidentiality agreement is signed that we'll give you information but don't do. We'll also create a data room. Sir, what is a data room? Now, obviously, the seller company's team will come to do studying, so then the buyer company will create a data room, a room where all the confidential information is there. It could be either physical, where a physical files will be opened and given to you, or they will give you a virtual data room where they'll say all our data is stored online. You can check it online. We'll give you username, password. Go ahead and check whatever you want. Okay, all the registers, etc. can be checked. So after checking that, then the decision will be made. Now, after the due diligence, very important, post the due diligence, if everything is sorted, then a clean report will be given. So deal maker is there, that the company in the due diligence report, outcomes of due diligence report. Okay, so what is the outcome? So once the due diligence is there, what will happen? One is, it could be deal makers, where you got a completely clean company, very rare to find, no errors at all. You'll go ahead with the deal. If exact opposite, you found a company which had lied all the way, then you will not do the deal. It's called a deal breaker, where glaring non-compliances, frauds are identified. Deal diluters, where non-compliances have been found quantifiable, so that much amount you will dilute by subtracted. For example, the valuation of the company you had fixed 1 CR. Now that you found non-compliance of 20 lakh rupees, you will minus that and say, I'll give you 80 lakh rupees. So you will dilute the deal depending on the non-compliance. Deal cautioners is not a non-compliance. It is about I have to take a cautious path. Like for example, the business is dying. For example, IPR will slowly, anything where I have to be cautionate about, the team will inform you. So deal breakers, glaring non-compliances, you will break the deal. Deal makers, if did not come against any non-compliance. Deal diluters contains quantifiable penalty. So numbering penalties you found non-compliance. Deal cautioners, if it does not affect financially, but I have to take a cautious path. For example, if you found that maybe the director has been reported of, you could say some kind of moral turpitude, etc. So all those things will be seen. And post diligence, if you found, then you can go ahead that these errors are there. Let's solve it through compounding, etc. Now, techniques of due diligence. Now, it is very simple to auditing techniques. So I will do background check. I will, vouching, verification, confirmation with third party, questionnaire. Same thing how audit data is collected. Similarly, you will also collect the same data here. You will do a KYC onto the clients, etc. Similar thing of audit evidence you will write. Now, types of due diligence. Very simple. Now we can see the chapter is over. Very general stuff will be given. That due diligence means a check, legal check, ethical check, strategic check, whether it makes sense to do the transaction, financial check, whether everything is in place, all the financial statements, etc. given were correct. Operations, whether the company's operations, machinery, etc. are good. What is the quality of the machines, whether we can operate it or no, for how long we can operate it, what's the life of the machinery, all that will be seen. Human resource, so I will see the quality of your staff. Information technology, so with technology you're using, etc. And bank due diligence is a due diligence on a bank. Let's see. So very simple. So just write the meaning of due diligence, learn the objectives and advantages of due diligence, just connected with this. So a due diligence for legal means checking the laws, compliance with the laws, and write the objectives, strength and weakness, opportunities, threats, discovers, etc. Okay. And in the laws, what all you will check? Compliance with company laws, SAB, everything you can write. Okay. If the company has entered into a certain transaction, then you will look at those things. So if you look at certain things, for example, IPO. So section 23 is there. You will see when they're coming out with ICDR regulations, private equity section 42, corporate restructuring section 230 to 240. So whenever any transactions there, you will check those specific things. Okay. Due diligence for M&A. So you will check section 230 to 240. Okay, whether they have complied it with properly or not. Due diligence of takeover, then the takeover code regulations, whether you've complied with or not, will be seen. Whether open offer was given properly. Due diligence of issue of security, so section 23, 42, etc. will be seen. Whether pass 3 is filed, etc. So just a little bit of connecting of your earlier thing. So due diligence of intellectual property law. So when is the intellectual property, which is the nature of intellectual property, getting a schedule of which all intellectual properties they have, what is the life of that intellectual property, valuation of the intellectual property, all this will be done. The scope, the nature, whether there is any infringement claims, okay, or pending, whether it is approved or it is pending, okay, all those things. When we see environmental due diligence, checking whether the environmental laws are complied or not. So environmental laws could mean air, water, National Green Tribunal, Public Liability Insurance Act, all this will be checked. Small parts they have given. So labor laws. So in labor laws, remember that all the earlier laws have been replaced and now 4 labor codes are there. How many labor codes? One is Code of Wages, the other one is Industrial Relation Code, third is Occupational Safety, Health and Working Condition Code 2020, and fourth is a Social Security Code 2020. So this is like after the amendment, you can remember this and not the previous one. All those are repealed. Then competition law. So in competition due diligence, you will check compliance with section 3. What is section 3? Anti-competitive agreement. Section 4, abuse of dominant position. Section 5 and 6, whether your combinations have been done as per law or no. So all these checking will be done. Very simple. FEMA due diligence, whether FEMA laws you can write initially, and whether the compliance with FEMA laws are done or no. Okay. Capital account, current account, FEMA is foreign direct investments are done. FCRA due diligence. So FCRA is all this we've done in executive, just the concept, and then due diligence, what we have done, you write there. The objectives, concept is connected. So your Foreign Contribution Regulation Act is about getting foreign contribution, foreign donations from abroad. So whether you complied with all the laws or no, foreign hospitality, foreign contribution has been done or no. Okay. Similarly, financial, you will check all the companies' accounting policies, companies' internal controls, taxation, expenditures, margins, whether they are in place as disclosed by the company. Now, bank due diligence. Market is important. Now, this is important. All this we did was okay, not very important. We could build it casually. Bank due diligence is a due diligence done by company secretary on a bank. Now, very important, RBI, under their regulation number, they've given you all this regulation number, have said that PCS is competent professional to certify a compliance with the banking regulations. So RBI has said when bank due diligence is to be done, company secretary is a good person to do it. Due diligence report also they have given you format, RBI has given you, and it should be done on half-yearly basis. So company secretary has been recognized by RBI to do due diligence on the banks. Now when we are doing due diligence, always remember, we are also like an auditor. Here also we are doing due diligence. If we are giving in a due diligence report, we have any qualification, same like auditors, then we will make it bold or italics. Okay. So this is the format of the due diligence report. Now when you go to see this format, very simple, we are making a report and giving it to the bank that we conducted due diligence and this is all this. So what all will you mention for the bank? So bank, if you remember, gives a lot of loans. So charges provision will be applicable. Directors provision, obviously they will be there. Then MOA, AOA, whether they have done. Bank gives loans, so loans, guarantees, section 186, whether they have complied. Loan to directors, if they have defaulted in any public deposit. So all these things will be seen. Okay. Ethical due diligence is checking the ethical character or reputation of a company, especially if Tata's is wanting to enter into a merger or wanting to buy a company. They would want to do a ethical due diligence onto the prospective company to see whether there is any ethical risk, reputation risk, any whether they have a policy for reputation management, they have a policy for ethical governance, whether they have an ethical committee, they have an ethical, your code of conduct, behaviors, you will check that. So very rarely, but it's just a concept. Strategic due diligence is about the commercial viability, trying to understand whether it is a good strategic decision to merge or to take over. Okay, whether we will get a good return on investment or no. Operational due diligence is about the operations of the company, functions of the company, where we will look at the cost structure, what all synergies are we getting, what all technological upgrades we have to do. We will look at the operation, the office layout, the seating capacity, the age of the assets, the lease agreements, the schedule of sales and purchases. All this will be done. We will try to uncover the operational weaknesses, the cost that will be there, might that come in. Okay, all operational costs, etc., will be verified. In human resource due diligence is where we check the human resource, how are they, and whether they are compatible, their HR policies, our HR policies are in place or no. So mostly when we do a cross-border due diligence, we would want to see whether our company and their company, their cultures can match, whether their organizational style is same like ours, whether there are any people related risk. Okay, all those will be seen. And that is it, we've covered. One last part is information due diligence. So information due diligence is checking the information technology, whether they are in place. Okay, so same we'll try to identify hidden risk related to technology. Okay, impact of those, any security risk that we have, any security management system, whether they are there. Okay, whether they are following acceptable standards, whether there are any ISO standards to be followed, risk levels, how we can mitigate the risk, etc. Okay, we look at the IT processes, the investment in cost, IT infrastructure, IT security, efficiency will be seen. NDA will be entered. So NDA is a non-disclosure agreement that, listen, we are doing a due diligence on you. We will get lot of information, but we will not disclose. It is a contract that we enter so that we protect sensitive data, patent related information, any kind of thing. So and the contents of NDA would generally be, they give me an example. It would be what all information is being supplied, and second, this information is confidential, should not be divulged except for the purpose stated, and after the purpose is over, this should be destroyed. Okay, which is in my possession. That is it. We have completed the due diligence chapter completely in depth and including the past exam questions. Now we are done with part B. Part B is going to rotate around this part only. In part A, we will try to cover some chapters. Okay. Now we'll go maybe try to cover some part A chapters and complete. Okay. So the chapter that we are picking up is important, but which is your signing and certification, legal framework governing company secretaries. So now we are going from part B. Now we are entering into part A. Now part A, let me tell you which chapters I plan to cover. Okay. So obviously all this is related to compliance management. I'll take up which is not. So we won't have to do a sequence. So I will be taking lesson number 4, which is there because it is directly hitting company secretaries. Okay. So I'm doing lesson number 4, legal framework governing company secretaries, and one more I'll try to do maybe lesson number 7, relief and remedies. Okay. So one from each part I will do. Compliance management I'm doing lesson number 4, and part 4 I'm doing relief and remedy. So we'll take a short break and we will start with the chapter. Clear? Everyone till here, is the concept clear? Do you all enjoying it? Yes or no? Everyone, yes or no? And then I will quickly go to the next part and complete it. In the chat box, waiting for your response. Then we'll quickly start with this and get over with it. Okay, Gautami, great, still there, still fighting. Ashwarya, very good, still fighting, excellent. Bhanupriya, Naveen, great to have you. Yeah. Now see, obviously, if the part A remaining chapters, if you're asking me, or part B, you can do it from a dream batch. It is there in the description of the video, or you can go to our website. The dream batch is there. I'll rotate it. So just join the WhatsApp group also. The dream batch contains all the lectures, everything. You can complete it from there. Okay, so this much I'll be doing it. Okay, so we'll take a 5-minute break and then we'll start and complete this chapter. Okay, 5-minute break and then we start and complete this entire chapter. Okay. Hello. Yeah. Okay. So quickly, can we have in the chat box if I'm audible and visible quickly, and then we'll move ahead. In the chat box, can we move ahead? Yes or no? GTG in the chat box, and we start and we complete. Okay. GTG in the chat box, we start and we complete. Okay. Gautami, great. What about others? Ashwarya, great. Chalo. Naveen, great. Let's start. Okay, let's start. Hi. So we begin with a chapter called as Legal Framework Governing Company Secretaries. This particular topic talks about a special act which governs company secretaries, and if we don't comply with the laws given by CS, then the CS Act 1980 will be used. Okay. So they go on to say how did the CS scope etc. come into play, the history. So normally what happened is the corporate affairs, the Department of Corporate Affairs, they introduced the diploma in CS. CS was never a course before. Diploma in CS was introduced. Then ICSI in 1968 was formed and it became effective from 1969. Then ICSI, which is looking at the structure of CS, how did it come? Okay. Then Section 25 company, ICSI was a Section 25 company. Then it got converted into a statutory body by an act of parliament. Now, if you see on the back of your module, below line it will be written that ICSI is a statutory body incorporated by an act of parliament. So initially in 1950s, they thought that we should have a particular professional who will look into the legal affairs. So they introduced, the Department of Corporate Affairs introduced a diploma. Then they formed ICSI. Then ICSI was formed as Section 25 company. Then they converted into a full-fledged company. And a particular act was formed which is called as the DP Act, Company Secretary Act 1980. What are the duties of Company Secretary? Remember, the duties of Company Secretary is very, given in short in your Section 205. It says that the duty of a Company Secretary is, is to report to the board, ensure compliance with secretarial standards, conduct meetings, assist the board, advise the board, and any other with the board will assign them. That is the role of a Company Secretary. Now, in your SEBI LODR, you have to remember regulation number 6 of SEBI LODR says that every listed company has to mandatorily appoint a company secretary only as their compliance officer. So regulation number 6, sub-regulation number 2, you have to remember, it is where a company secretary is mandatory to be appointed as a compliance officer. Okay. Now we start understanding what all is there in the topic. So once we understood the history, now they tell something about the CS. That CS could be two things. One is a CS in employment and the other one is CS in practice. So a CS in employment means he is employed in a particular company and whole time he will devote to that company. For example, if you have been appointed as a CS of Tata's, so you are a company secretary in employment, you are doing a job. But let's say if you are set up your own firm or working in a firm, then you will get a COP number, okay, and you will be a company secretary in practice, where you will give advisory not only to one, but you will give advisory and multiple services to any company. So one company, someone can come and say make a incorporation. Someone will come and say do this filing. Someone will come and say, do my this structuring. So you will do it. That's a CS. Here you're working in a firm. So I believe you know that you're working. You can either work in a company or in a firm. When you work in a company, it's a company secretary in employment. When you work in a firm, it's a company secretary in practice. Okay. So and they've also given, when it is deemed to be in practice, means you're giving consultation work, you're doing M&A work, etc. for multiple companies. We'll come to that. What is a deemed company secretary in practice? Okay, that means you're doing all the work of a practicing company secretary, so you're deemed to be in practice. You're obviously, it means that you're in doing practice. Now, once we did the bifurcation between company secretary in employment, now we did bifurcation with company secretary in practice. Now we are seeing another two bifurcations. One is the difference between ACS and FCS. So ACS, moment you become a company secretary and complete your training, so you cleared your exams and your training, then you get a ACS. Okay, so you become a ACS. So now when you clear your professional exam, then do your articleship, then you will get a number which a ACS. You will be considered as a ACS. After 5 years, when an ACS has 5 years of experience, he will now be called as a fellow company secretary. FCS will be added. Okay, so your ACS with 5 years of experience is called as a FCS. Now ACS, you have got, what is a ACS? Is you have not only completed your exam, but you've also done your practical training. This you must have done in the current regime or in the old regime, old syllabus, new syllabus, all it is covered. Okay, so what is section 5, okay, of CS Act 1980 says any person, once his name is entered in the register of members, he will be deemed to be a associate member. Regulation number 4 says he is an associate member if he's completed training maybe in the old or new regime. Okay, he has completed the training. And they also say that, imagine in London, if you've done in London, you are there, so you will be deemed to be a ACS here also. Okay, any other qualification government is approved, then we will give you ACS. But primarily it is your exams you've done and practical training. Fellow is a ACS with continuous 5 years of practice. So when you have a continuous 5 years of practice as a ACS, you become a FCS. Okay, ACS associate will become a fellow if you have, so ACS has 5 years of service as a company secretary, continuous 5 years of service, whether in the current regime or in the previous act or in the previous old syllabus, new syllabus is all allowed. Okay. Ineligibility for fellowship. So obviously you would want to be a fellowship, so it shows that you are a senior company secretary. So an associate will not be admitted as a fellow if he was guilty of misconduct and he is not covered his certain training hours, professional development credit hours. So once you become a CS, you have to keep getting credit hours, otherwise you can't become a FCS. Okay, certificate of practice for a firm. Okay, so if you want to practice, then you will get a COP number and you can practice. Deemed to be in practice means what? Now understand, see, here you are working in a firm or you are owning a firm, you are giving services to multiple companies. So a person is deemed to be in practice if you see all this work. What all work here happens in a firm? If for remuneration you are incorporating companies, doing amalgamation, share transfers, secretarial audit, you are doing advisory services, any kind of publicly hold himself as a company secretary in practice, then you are there. Now there is a concept called as register of members. When you go to ICSI, in their option they tell you details about their members, so you can find out any person, you put their name, membership number, all the details will come. Okay, so ICSI has to maintain on their portal only, they maintain all the registers of all the members. They maintain a register where names of all the members are there. So the date, membership number, qualification, certificate of practice, email ID, phone number is all given on the ICSI website. So ICSI shall maintain a register where, whether manually or electronically, containing all the details of every member. Removal. So if a person is dead, has requested, has is any, when your name will be removed, person is dead, he has given a request, not paid membership fees, or they have ceased to be, or any other reason, they got any disabilities, or they have been removed due to misconduct. So their names will be removed. Now disciplinary mechanism, very important. This is the second half of the chapter. So first half was simple about origin of ICSI, whole time company secretary practice. Then came about FCS and ACS. Then we did about when your name will be removed, register of members, etc. Now we start with the next part of the chapter, which talks about disciplinary mechanism. That if you do something wrong, punishment will be done. So a member of a CS, like a company secretary, is subject to disciplinary mechanism under chapter 5, that is misconduct of CS Act 1980. So a member of institute is subject to disciplinary action under chapter 5, which is talking about misconduct in CS Act 1980. So note down the section numbers. So first thing is disciplinary mechanism. I'm explaining it to you. So first, there is a director of discipline called as DD, disciplinary directorate. He's an officer. The investigation, inquiry, summary, all those summons, etc. is given by the disciplinary director. He is at the first level. He is given under section, the details of him is given in section number 21 of the CS Act 1980. Now when the director has found that you have done something wrong, then he will take action. He will inform either the disciplinary committee or he will inform the board of discipline. So he will inform either the board of discipline or the disciplinary committee. So on what basis will he inform? So if you have done a schedule 1 wrong, then he will inform the board of discipline. If you've done a wrong under schedule 2, so there are two schedules. Schedule 1 wrongs are dealt with board of discipline and schedule 2 wrongs are dealt with disciplinary committee. So board of discipline is under section 21A and this is under 21B. Okay, so let's see. So first you have your director of discipline. Okay, is given under section number 21. Now he will, if he finds that you've done a schedule 1 offense, if you've done schedule 1 offense or you have done schedule 2 offense, he will figure out which kind of misconduct you have done. Okay, let's say you have done schedule 1 offense or misconduct, then he will report to your board of discipline, your board of discipline. Okay, board of discipline, which is section number 21A. If you've done a schedule 2 misconduct, then he will report to disciplinary committee. He will report to disciplinary committee. Okay, which is given in your section 21B. Till here it is clear. What is schedule 1? You will see what all punishment they have given you a list of misconducts. If you've done that, then board of discipline will take care. If you've done schedule 2 wrong, then disciplinary committee will take care. Okay, at least these sections you can quote. Now imagine if they passed any order and you're unhappy, then you will go in appeal. Okay, then you will go in appeal. Appeal provisions are given under the next section. Okay, appeals are given under section 22. Concept clear? Okay, we'll see. Now section 21, who is disciplinary director of discipline? So whenever a receipt of complaint is there, the director will make a prima facie opinion of the alleged misconduct, and his job is to identify if it is a first schedule offense or is a second schedule offense. If it is a first schedule, then he'll refer it to the board of discipline. If it is schedule 2 offense, he'll refer it to the disciplinary committee. Okay, and what is the power if if they find that you've done schedule 1 wrong, then what will happen? They can either, schedule 1 wrongs are little less wrong than schedule 2 wrongs are more serious offenses. So if you've done board of powers of the board, first schedule wrong you've done, then reprimand. So they'll give you an opportunity being heard. If a person has been guilty of misconduct, then they'll give you an opportunity being heard. They will take any of the following actions. Either they can reprimand you, they can remove your name from the register of members for up to 3 months and impose a fine of 1 lakh rupees. Okay. Now if you do a schedule 2 offense, see similar things. If you've done schedule 2 offense, okay, then who will take care? Schedule 2 offense. So schedule 2 offense, if you've done, then disciplinary committee will come. If they find that you're guilty of misconduct for schedule 2 offense, okay, then they'll give you an opportunity being heard and then to reprimand, remove your name from the register of member permanently. There it was how much time? Only 3 months. Your permanently, and fine was given how much? 1 lakh. Your fine is given as 5 lakh rupees. So schedule 2 offenses are more serious. Okay, clear. Now appeal provisions. Okay, so appeal provision I told you is given in your section number 22A. A member aggrieved by the order of the board of discipline or the disciplinary committee may appeal within 90 days, okay, to the council. So ICSI has a special council. So appeal is made to council within 90 days of order. Clear? Within 90 days you go to the ICSI council, which is the most supreme body under ICSI. Okay, and what is the power of the council or the appellate authority? They can modify, set aside, reduce the penalty, remit the case back, okay, after giving an opportunity being heard. Now we'll see what are the offenses under Schedule 1 and Schedule 2. Now we are seeing what are the offenses under Schedule 1 and Schedule 2. Now Schedule 1 has 4 parts. If you see part 1, this is all Schedule 1, Schedule 1, Schedule 1, Schedule 1. So Schedule 1 has 4 parts and Schedule 2 has 3 parts. Okay. So they will look at which one offense you have done. Serious offense will go under Schedule 2 and less serious offense will go under Schedule 1. Schedule 1, who takes action? Board of Discipline. And in Schedule 2, disciplinary committee. Clear till here? Now we'll see which all is there. Okay. Now I will give you a full gist where in one shot everything will get over. Okay, one shot everything will get over. Just pay attention. You don't need to read all 3. Okay, all this in depth. I'm going to teach you one thing where, because more or less all will be around the same concepts only. So just remember this, what I am teaching you. Okay, these are the ones. The first one, 5-6 points come from this only. Imagine, now this is all misconduct. This is all misconduct. If you you're a professional. Who is a professional? A CA, CS, CMA are professionals. So in my firm, if I give the work to be done to a non-professional, it is considered to be misconduct. Okay, so giving the work to misconduct, giving a person who is not a partner or an employee, giving to a third person who is not even a professional, so it comes under misconduct. If I give a guarantee to any of my client that I will guarantee do a tax structuring and reduce your tax, this is again misconduct. Giving assurances, you cannot give assurance. Okay, doing any other business or profession, for example, I am a CS, I start up a firm, I should do CS work only. If I start doing work of maybe real estate consultancy, it is again maybe not related to CS, or I start doing marketing, it becomes professional misconduct. If a company secretary is issuing advertisement, creating schemes for marketing, we can't market, we are professionals. Next is we do profit sharing with a person who is not a partner. So for example, I appoint an agent, I tell that you get me clients, whatever money I get, 5% I will give you. So sharing profit, commission is not allowed. Okay, so these are the main primary misconducts which are there. You can note it down and then just connect all the sections that I have taught you. Okay, so practicing in the name of a PCS by an unauthorized person. So when an unauthorized person is doing, it is not allowed. Again, you're sharing the fees with an unauthorized person. So your money not allowed. You appoint an agent, etc. Not allowed. Okay. Accepting profit from a non-member. So again, you cannot give your profit share or you cannot take a profit share from a person other than who is a professional. Okay, that is all misconduct. Okay, so all I have covered, it falls under these categories only. Again, breach of confidentiality. These are more serious offenses. Okay, so now we're doing schedule 2 things, which are about serious things. You leak the information. Now we're doing schedule 2 offenses. All the schedule 1 I've bottled and I've given you above. Now I'm telling you schedule 2 offenses. You leaked the confidential information of the client. Okay, you are certifying, giving certifications without detailed checking, conducting requisite checking. So it is considered to be a serious schedule 2 offense. You are giving guaranteed forecast that I feel that the company will definitely touch a valuation of so and so. That is also misleading the people. You are taking up a matter in spite of having conflict of interest. That is a serious non-compliance. Failure to disclose material facts, failure to giving material misstatements, gross negligence. Okay, giving opinion without sufficient checking. More or less, now you see which is the serious ones. Okay, mismanagement of the client funds. Okay, this is there. Contravention of any act, regulations, not allowed. Okay, disclosure of confidential information by employee who is a member. Same thing. If I'm a CS working in a firm, I leak the information. I'm a CS in a company, I leak the information. That is also serious offense. Giving false information to institute. Again, embezzlement of money. You try to rob the money, theft, all of this. Okay, so again, part 3 talks if you are convicted of an offense with more than 6 months of imprisonment. So more than 6 months imprisonment is there. So then it comes automatically under schedule 2 offense. Okay. So a company secretary was convicted for tax evasion for sentence for 1 year. Since it's more than 6 months, it is treated as a schedule 2 misconduct. Okay. Now process of investigation, very simple. I told you the full process, you know it. The directorate first identifies suo motu, then gives it to the board of discipline or the disciplinary committee. Then after being heard, they will give you an opportunity being heard and then pass your orders. Just like our court works. Now we come to very, very, very important concept, UDIN. Okay, unique identification or unique or document identification number. Market is super important. So it is a 17 digit. It is a 17 digit number. Let me explain what it means. Okay, it's a 17 digit number that you have to first obtain, put it on your certification. Let me explain the process so you will understand. So just like you have a Facebook account, okay, once you become a company secretary, you have to have a UDIN account. You have to go to udin.icsi.edu. You go there, make your own profile and create it. Now when I'm doing a certification, I have to go to the UDIN site. There I have to enter what is the document, for which client am I doing, and generate a UDIN number. A number will be generated. That number on my certification I have to put it. It's a 17 digit number. That UDIN number I have to put it along with my COP number. I will attach it to the e-form and maintain a record. What is the use of this? So moment I create that number, normally signs used to be forged. Okay, sign used to be forged, wrong. This I used to say, I don't know who gave the certification, it's not my signature. So this used to create a lot of problem, because after signing I say I did not give the certification. So they say now from your portal, how do you got the number? That means someone logged in into your portal, got the number, put it here, and also in your numbering will be there. So if the maximum number of audits that you can do, we will come to know that these many numbers mean these many audits are over. So this is a UDIN number. This is mandatory to be attached now. So what is a UDIN number? It is a system generated number. It is done to verify the authenticity of documents. So we'll come to know, okay, fine, this document number is given, means the company secretary has only signed it. It is mandatory to quote all the UDIN numbers on all the certificates as told by government. Purpose to verify, to prevent counterfeiting, to maintain a record also of how many we have, to ensure compliance with the ceiling limit. So I'll come to know if 20, if 15 only I can do. So 15 numbers have been generated for settled audit. So now I can't generate more. So all this will be there. Now when this has to be generated, moment you generate, first number will be generated, within 7 days you have to sign the document. So UDIN can be generated. So just remember this line, that moment you create the number, within 7 days you will sign the document. Okay. Now we come to another important topic, which is called as ESIN. Okay. Your employees company secretary identification number. Okay. What are we doing? Your employees company secretary identification number. Very, very simple. When you become a CS of a company, or when you resign from the company or remove from the company, you have to generate this ESIN. Okay, company secretary employee. So when you become an employee of a company, you will go ahead, log into the portal, create a number and attach it. When you leave the company, you log into the portal, tell resign and that you've resigned, and you will create it. It's a 18-digit number. It's a 18-digit system generated number. Again, what is the process? What is the process? Let me tell you. So let's say you have logged in into the ESIN portal, that is ecsin.edu.icsi.edu. You have to log in there. You go generate it at the time of logging or at the time of leaving or resigning the company. So if I've joined Tata's, I will go ahead, create it, and I will inform Tata that this is my number. When I leave Tata's or resign it or I'm removed, then again I have to create it and tell that I've ended this job here. Okay. All the details will be put up to get this number, your employee number, your under whom are you employed, what is the date of joining, what is the date of ending. It's a 18-digit number and it is reported to ICSI. Clear? So what is your ESIN? It's an employee. So the primary objective is to identify where have you been appointed and when did you cease to become a company secretary. Okay. It identifies who is the company secretary in employment for that company. Okay. The number is to be generated by the company secretary himself. Okay. At the time of joining and at the time of leaving the company. Now, very, very, very important stuff about advertisement rules. Okay. ICSI has issued guidelines for advertisements, do's and don'ts. What they have given? Do's and don'ts. What you can do, what you cannot do. Okay. So first thing is, if I have a firm, can I have a logo of my business? Can I have a website? Can I have a branding? Can I go on YouTube and share information aspects? Can I go on TED Talks? Can I go as public speaking? Can I host events? All this you can do. Okay. So a company secretary in practice may advertise in the following manners only. These are all permitted activities. These are all what? Permitted activities. Advertisements that is allowed. You can have your own logo, own website. You can have your own workplace. Every file, my logo, all that you can wear. Okay. Your stationery items can have your thing. You can have a social media account. You can engage with your community. Now what you cannot do? You cannot do anything which is false, misleading, violating CS Act, claiming superiority above other professionals, creating disrepute to the sometimes what happen on YouTube, they go and they tell that ICSI scam. That all is misconduct. Okay. So where you put yourself as the best company secretary in India, that all is not allowed. Okay. So that is your profession. You cannot do that. Okay. Fee related claims. If no fee, no results. So this also cannot be done. That's a wrong kind of advertisement. You cannot guarantee success guarantees cannot be given. Misleading slogans cannot be given. Okay. Now aggregator sites. Now very, very important. This is a new kind of thing. Nowadays what is happening is Just Dial also have list of lawyers, list of company secretary, whether that is allowed or no. See, when you go to urban clap, you get plumbers, you get carpenters, you get makeup artists. Now, will you get company secretary also? So they say you are not allowed to maintain the dignity of a profession. They said a company secretary cannot get listed on any aggregator platform. Okay, nowadays this business is there. Urban Clap, you know, na Zomato, you know, aggregating all the hotels. So this is not allowed. Aggregating sites for CS, etc. Prohibited. Multi-level schemes. You make one member and then they will make two members. That is also disallowed. Prohibited. Okay, mandatory disclaimer on the website is there that the company secretary ICSI does not own any responsibility if the member has done any wrong. This every single website of a CS should be there. Okay, if you not complied, it will be treated as a misconduct. Professional liabilities are there. We saw what all liabilities can be there. Reprimand, removal of name, penalty. Okay, so you should work in bed. Then there is, we seen in section 92 also they is giving you a penalty if you not done. Incorrect certification, section 445, 447, 448. All those penal provisions have been given. Now, against the company secretary, there can be two liabilities. One is your statutory liabilities, like in your section 92, annual return not filed, law has only given you the punishment. Section 447, giving misstatements, fraud by professional, it will come statutory liability, statutory punishments have been given. And the other one is contractual liabilities. For example, even it can be treated as a breach of contract and the company can individually file civil case also on you for recover of damages, etc. that you have caused. So professional liabilities can be statutory, which law has told, and apart from that you breached your own client's trust also, so they can also file separate things on you for their damages, etc. Okay, with this we have completed the entire chapter as well. Okay, all the important aspects that can come in your examination we have completed. Okay, okay, thank you. So now first thing is, do like the video, share it with your friends. Very beautiful comment by Prashanti. Extremely happy. Just my request to all of you all, share this with your friends in your study circle. It takes obviously a lot of time, effort to talk for so many hours continuously and cover so many things. So all request what you all can do for me, just share it with your friends. I'll be very happy more and more students can learn from you. Okay, thank you so much. Okay, thank you. Okay, so any other chapter you want me to cover? Okay, thank you so much. We've covered with this chapter. Believe I can just take up one more chapter and complete it. Okay, which one? Relief and this. Okay, Ashwarya, great. Thank you so much. Okay, great. Thank you. Now, one last chapter I plan to cover more is your relief and remedies. Relief and remedies. Okay, great. Everyone, you all ready? Yes or no? Relief and remedies, we'll start and we'll complete it. In the chat box, can we go ahead and complete this chapter? Do I have your permission? Yes or no? Waiting for your response. Okay, this also will complete it. Great. Gautami, great. Okay. So we'll take a 5-minute break. We'll come back and complete this entire chapter. GTG, great. Ashwarya, great. So I think we will be completing this full chapter. Naveen, great. Okay. So 5-minute breaks and we come back and we complete this chapter. Okay. So 5 minutes and we will start with this particular chapter. Okay. So guys, am I audible and visible? Great. Okay. So we will be starting and completing this particular chapter and all the important aspects of it. Okay. Remember one thing, that this chapter looks very big. Okay, and that is why I've taken it and I am completing what will come from the exam point of view. Okay, including the past exam questions. So GTG in the chat box. Let me know if I'm audible, visible, and we are ready to go and knock off the chapter. Great, great. Okay, so let's begin. Okay, let's start. Hi, so we begin with a chapter called as Relief and Remedies. Normally, whenever there is a non-compliance, okay, non-compliance, penalties follow. And when there is a non-compliance, then we will look under the act itself. There is some reliefs and remedies that has been given. Okay, one of the classic example is compounding. Now let me tell you this provision. What does the chapter contain? This chapter contains 4 parts. That is, compounding is one of the things where you can settle the dispute by going to the authorities, paying the compounding charges, settlement charges, and they will drop the case against you. Okay, so under SEBI Act also there is compounding, there is under FEMA also. So these 3 acts they have given you where compounding is given, where you can get a relief. So if I've done a non-compliance, I've missed a date. So what happened is I simply have to go to the authority, find the compounding section and do it. So you just have to note down which are the compounding sections and close. So what is compounding? Compounding is a process of settlement of dispute by paying some charges. You go to the authority, say that I'm paying these charges, please drop the case against me. Okay. And the 4th part they are also talking is one of the relief and remedies. New kind is mediation and conciliation. This is the 4th part of the chapter. 4th part of the chapter is mediation and conciliation, where nowadays courts itself have a mediation center or mediation panel where they say that please go to this mediator, see if you all can settle the matter amicably without coming to court. Let's begin. So under Companies Act, first we start with 3 acts. We'll be seeing Companies Act, FEMA and SEBI Act. Compounding has in the 1956 Act was given under section 621A, and in Companies Act 2013 it is given under section 441A. Okay. Now what do you mean by compounding? So compounding is a concept in Companies Act, okay, is under 441, where you pay the compounding charges and settle the matter. Okay, so it is a voluntary thing you can approach. It's a settlement mechanism. You can go forward and close the matter. Now what is the process? First of all, I have to route it through the ROC only. Okay, through the ROC, I'll go to the ROC, file GNL1. Okay, then I have to pass a board resolution that the company has agreed, the company's directors will file a board resolution and it will be in MGT 14. You inform. Now not all forms require special resolution. Some things have to be filed apart from this also. So here for compounding application, when you're doing, you've taken a board resolution, we have to go and file with the ROC MGT 14 GNL1. GNL is for general form. So these 2 forms is an application to the ROC to settle the matter. Then ROC will forward it to the respective authority, NCLT or RD, to settle the matter. We'll see when. To ROC will forward it to whom, and then once the NCLT has passed an order, okay fine, we are settling the matter, pay so much money, we'll close the thing, then INC 28 will be fine. So remember this. Then in compounding, 3 forms are to be used: GNL, MGT 14 and INC 28. Okay, so what is compounding? Compounding is a settlement mechanism where the defaulter admits his claim and agrees to pay a compounding fees. Now in compounding there are multiple subsections. Okay, so we'll, in the chapter they give it at different places. I have brought it down all in one place. So section 441 subsection 1 says that if the fine is 25 lakhs or less, so fine is small amount less than 25 lakhs, then RD will settle the RD is the authority who will settle. If the fine is more than 25 lakhs, then NCLT or tribunal will settle it. So 25 lakhs you have to remember, 25 lakhs fine amount. Then comes restriction on repeated offenses. So if I have done compounding once, then for 3 years I cannot compound a similar kind of violation. Okay, and not only that, what happens is if I do a within 3 years, if I repeat the offense, the penalty amount becomes double. So remember this, that if within 3 years, so if I have done a violation, I can approach the authority to settle it. Once I settle it through compounding by paying the charges, now I cannot take it leniently. For 3 years, I will not be allowed compounding again. So I have to be careful, okay? Then comes the process. So application is filed to ROC, it is given in GNL 1, who will then forward it depending on the fine amount to either the RD or the NCLT. If it is more than 25 lakhs NCLT, more than 25 lakhs NCLT, and if it is less than 25 lakhs, then it will go to RD. Okay. Now, when you go telling the ROC that I have done a violation, they will say, okay, fine, we are ready to settle, but pay, all the default, make it, comply with all the defaults that you have done. So all the defaults or the pending returns has to be filed along with the late fees. So whatever non-compliance you've done, you have to go ahead and complete your compliance. That is in subsection 4. Subsection 5 says penalty. Penalty has been given. If you have repeated the offense, then twice penalty can be given. Then a special court will be made to settle criminal offenses where imprisonment is involved. Okay, so wherever imprisonment only has been given or imprisonment anything is connected, then you require imprisonment or fine is there, then you have to go and to special permission of the court is required. And section 441 subsection 7 is no offense shall be compounded except by the procedure laid under section 441. So again we go back, what all points have been given. First is 25 lakhs, authority will change accordingly. 3 years point has been given that once compounding is done for 3 years, it cannot be done. After 3 years, if I do, it is treated as a fresh offense. Okay, the process is routed through ROC. ROC will find out whether he has to give to RD or NCLT, and it is given in GNL 1. MGT 14 also has to be filed. Okay, compliance restore, they'll tell you to comply with the non-compliance, whichever is there, they'll tell you to fulfill all the requirements that is done. Now, there are some points here. Under Companies Act, what all is there? Section 441. Wherever it is been written that wherever it is said imprisonment is not compulsory, only such offences can be compounded. Okay. So if you go to ROC, GNL 1, all these forms are there. If the fine amount is up to 25 lakhs, RD will be done. If it is more than 25 lakhs, NCLT will do. Okay. Before you go, they will tell you to make good the default, that is all the defaults that you've done, they will tell you to rectify it. Okay, now within 3 years, if you do it again, now fine will double and now you cannot compound it. After 3 years, what happens? It is treated as a fresh offense. Clear? Now all these points which is there is same in the other acts also. So wherever imprisonment is compulsory, that cannot be compounded. Okay, let's see. So now we will see, we've done all the sections. Okay, see, important ones we'll do. That 441, wherever which can be compounded, wherever it has been given, wherever imprisonment is not compulsory, only such offences can be compounded. So if you see these under 441, wherever fine only, or imprisonment or fine, or imprisonment or fine has been given, such can be compounded. What cannot be compounded? Wherever they've said imprisonment is compulsory, imprisonment and fine, or where investigation is ongoing, or I also told you, if within 3 years of previous compounding you've done a similar offense, law says now again we have compounded it, again within 3 years you have done the same offense, so we will not allow compounding. Okay, that's it. Then 25 lakhs or this exceeds 25 lakhs, then you go to RD. We have done this. that if the fine amount exceeds 25 lakhs, then you go to tribunal, that is NCLT. Does not exceed 25 lakhs, then you go to RD. Okay. So if you go to see, they have given you the list of offences. Wherever you see if the fine amount is maximum 25 lakhs, it can be settled by RD. So you don't have to learn, just I'm giving you the base that wherever you will see the fine is max 25 lakhs, RD is the one. If it is more than that, then they will say it can be settled only to tribunal. So wherever you will see your punishment is 1 crore, so it is more than 25 lakhs, so it can be settled only through tribunal. Okay. Now, compounding of repeated offences. So I told you 3 years is the threshold. 3 years is the threshold. So if within 3 years you repeat the offence, then law will not compound it. Instead, they will give you under section 451, for repeated offences, the fine amount is doubled. Okay, that is given. Now we are done with the process. Okay, now the same thing, if you go to see, it will be for SEBI Depository Act. So just learn the provisions, rest all you can write the same. Okay, similar things are there. So compounding, what they have told, now we are seeing compounding in SEBI Act. Compounding under which act? SEBI Act. Okay, great. Okay, so compounding, they have told you Securities Act, SCRA Act, and you have a Depository Act. So they give you the sections, you can learn that, you can quote it. So compounding provisions are given under 24A under SEBI Act, 23N under SCRA, and 22A for the Depository Act. Okay. Now, as we saw, the compounding authority for Companies Act was RD and NCLT. In SEBI matters, who will compound? SEBI is put a fine, so who will compound? It could be done by SAT. So remember, the compounding authority in SEBI matters will be SAT or court. Okay? Mainly it is SAT. Okay, and which offences can be done? Which is imprisonment only, or imprisonment and fine cannot be compounded. As I told you, same as before. Section 24A. Now there is a settlement order, settlement scheme, or one scheme we'll be reading about, which is your settlement mechanism, your SEBI settlement mechanism. Let me come to that. Consent orders. So remember one thing, that here, that in SEBI you see that imprisonment, fine, etc. So these are all criminal aspects. Criminal, where imprisonment can be given. So that is the criminal aspect. Wherever civil matters and administrative matters, they say compensation will be given. Fine or imprisonment will not be given. So SEBI has divided it. Now pay attention. We are doing the second part, which is SEBI. They are saying that section 24A talks about compounding for criminal matters. Because fine, imprisonment, etc. is given. They said that SEBI has introduced something which for civil and administrative matters, they have introduced something called as consent orders or settlement regulation. So this only deals with civil matters. No fine, imprisonment is written. Okay. So we'll be seeing consent. So consent orders is a mechanism for civil or administrative violations. Okay. Now let's go into this and finish it off. So compounding is criminal. Okay, criminal cases. Consent orders or settlement orders is for civil matters. Okay. Normally compounding authority is SAT. Here it is a proper panel, settlement mechanism. I'll tell you what is the procedure, how you go to SAT and end it. Here what happens, if for civil matters, I'll tell you how it works. For the civil matters or consent orders, I'll tell you the mechanism. That if someone has violated the SEBI laws, civil matters, then SEBI has an internal committee matter will go to internal committee. Internal committee will look, okay, fine, this guy has done this civil wrong. Let's end this by giving him this charge. So first review is by internal committee. Then the matter is forwarded to the high-powered advisory committee. They will do a second check whether they should settle the matter or no. After that, then the whole SEBI whole time members will decide whether to settle it or compound it or not. So this we are seeing settlement mechanism, consent orders. What is the process? The person who's done a violation will approach SEBI internal committee. That internal committee will look whether we should settle or no. Then if they are agreeing, then they'll give it to high powered advisory committee, and then they give it to the topmost body again. In the last will review it, whole time members. So final will come when whole time members approve it. So this is the process. Just remember that you're done. And one thing you have to remember, that once settlement has been done, settlement, consent orders, compounding has been done, then it is not appealable. For example, an order was passed with the consent of the parties. Then the party cannot go in appeal. Okay, no appeal is there because the party only himself came and settled the matter. Now, settlement amount, what we get, whatever amount you get for settlement goes to the consolidated fund of India. The amount is credited into consolidated fund of India. And disgorgement amount is other than some fraud, etc. That amount when we recover, legal cost, etc. is given in IPF, Investor Education Protection Fund. Okay, so this is the process. Any person who has violated, now this is the entire regulation number you can remember. Concept I have told you. SEBI Settlement Proceeding Regulation 2018. It is a mechanism to settle civil matters, civil and administrative matters. First, where does the matter go? It is filed to the internal committee for first review. SEBI's internal committee it goes. Then it goes to the HPAC, high powered internal committee. Then it goes to the whole time members. For small matters, they can summarily try without following this entire procedure. All the information inside the members, etc. will keep it confidential. Okay, so this is given. All this is covered. Okay, while deciding the amount, they will see what all. So this you can remember, but very simple also. That while deciding the penalty amount, they will look at how much loss you have caused, how much benefit you have got. Okay, what was the track record of the offender, how cooperative he was. All these things will be seen. Okay, so this is the entire thing, and it is done. Now we'll be doing same compounding under Competition Act 2002. Now, what does Competition Act deal with? We are done in ECIPL, the economic laws. So, Competition Act is an act which governs about competition related aspect. So, new section was added. That is your section 59A was added for compounding. Under which act? Competition Act. And same points they have written. That listen, only where imprisonment is not compulsory, only those offences can be settled. Then we are done with Companies Act, we are done with SEBI Act. Now we are doing with the third one, which is FEMA Act. Same points, but just remember here, in FEMA, you have the RBI as the regulator. For Hawala matters, you have Enforcement Directorate. So they are the compounding authorities. That's all. In FEMA, one difference is that on the fine amount, they have multiple authorities. That up till this fine, this guy will be deciding. Up till this fine, this guy will settle compounder matters. So let's see. FEMA, you'll remember that the penalty is given under section 13 and compounding is done under section 15. So as we saw in SEBI Act, which was the section 24A, and SEBI Settlement Regulations. So these two, criminal civil. Now for FEMA, you will have to remember section 13 and 15. 13 gives you the penal provisions and 15 gives you the compounding, that you can compound it. Once you have given an application, within 180 days, it should be compounded and settled. I told you who are the regulators, normally RBI, and for Hawala transactions, it is Enforcement Directorate. Okay. Same points they have given you, that who is the compounding authority? RBI, and Enforcement Directorate whenever it is related to Hawala. Okay, they've given you that depending on the fine amount, who will deal with the matters. So section 3A, which is Hawala transactions, is dealt with the ED, power of ED to compound the matter. This is for section 3A of FEMA matters, which deals with Hawala transactions. Normal matters are compounding authority is RBI. Rest all provisions are the same. Limit of compounding, same point. Within 3 years, if compounding has been done, within 3 years again we will not compound. After 3 years it is allowed, we are ready to compound, it will be treated as a fresh or first contravention. Okay, procedure is same. You give an application to the authority, they will study your portion being heard, then the particular compounding authority, whether it is ED or RBI, will look and then compound the matter. Once they have decided, then they will drop the matter if they are taken up. If they are not filed a case, then they will not file the case. Factors to be considered while considering compounding application. So how much gain you have got, loss you have caused, economic benefits that is there, the repetitive nature, the conduct of the offense, any other factors. Okay. Now remember one thing, that whatever amount you pay, okay, it will be made in a DD to the compounding authority and has to be paid within 15 days. And after you pay, you get a certificate of compounding. Okay. So for example, if the compounding authority has said that pay 2 crores and close the matter. So if they pass the order, within 15 days you have to pay the compounding amount. Then they've brought in a concept called as late submission fee. Now, as an alternative to compounding, very simple concept, alternative to compounding. What is this? That normally you have to go to the authority, then they will study, look at various factors and then decide the amount. Now, if some procedural form filing has been done, like if you've taken a foreign loan, there is a FLA filing that every year you have to do a compliance. If that is not there, they just set a late filing fee, late submission fee. This much fee you pay for late fees. Like how you've not filled your exam form on time, how ICSI puts a late fee. Similarly, RBI has put a late submission fee they will introduce. So you don't waste time of RBI to find and compound, decide, etc. They've given you the thresholds also. That if it is a periodic return, okay, then the fine amount is set as 7,500. If it is a returns capturing flows or transaction reporting, if multiple, it requires a full transaction flow is there, they've given, then the fine is 7,500 fine amount into your number of years of delay. So whenever there is a flow transaction, flow of things have not been done, then this is the fine amount. If one periodical return is not filed, then you will go here. If flow of transaction is not being captured, then you have this 7,005 plus this penalty. So 0.025% into the amount involved in delayed reporting. So let's say 1 lakh you've not paid, for 2 years you've not paid. So you will do 0.025% into the fine amount and for how many years you've not done, and whatever amount you get plus 7,500. Okay. So how do you pay the amount? You go to RBI forms portal and pay the amount. Once the fees is paid, it is non-refundable. Okay. Now we come to the last part, which is mediation and conciliation. We've done in executive, we've done a chapter called as ADR, okay, arbitration and conciliation. So from that only it's called as ADR. We are seeing mediation and conciliation. So what is the difference between mediation and conciliation? So in both of them, we try to resolve the matter with the intervention of a third party. In mediation, the third party has less active role. He does not give any proposals. Whereas conciliation is more, the third party will take a lot of efforts, will be active, will give a proposal, etc. and will settle the matter. So conciliation is more, the third person takes a lot of action. Okay. Now in CPC, okay, nowadays you go to courts, outside only there are mediators and conciliators. Why? Because section 89, this you can quote it in the exam, section 89 of the CPC says that courts can refer disputes to mediation and conciliation. So sometimes family matters are referred for mediation conciliation. Sometimes any company where they feel it's an ego clash, they will refer it to mediation and conciliation. They made model mediation rules 2003. Okay. In Companies Act, you can remember the section 442. So remember, mediation and conciliation under Companies Act is right after the compounding section. So section 441 is compounding under Companies Act, and 442 is your mediation and conciliation. So you can remember the section. The provisions will remain the same, that you will have a panel. If you want to act as a mediator, if I want my name to be added as a mediator, so that anyone wants to hire a mediator, I will be there empaneled with the Ministry of Corporate Affairs. So I have to file MDC1. What is MDC1? It's an application for empaneled as a mediator. I want to become a mediator, so I will file to the Ministry of Corporate Affairs MDC1 and my name will be put. Okay, they've told you disqualification, who all have moral turpitude, disciplinary action is taken, conflict of interest, then I'm disallowed. Now they'll talk about MDC2. For example, if there is a company, they feel that two companies feel that they want to hire, they don't want to go for arbitration, they want to go for conciliation. So they will write to the Ministry of Corporate Affairs in MDC2 that we give us, refer one mediator or conciliator for us. Okay, so you apply to the RD to appoint a mediator for you. Okay, this is there. And then they cannot pass any orders. But they will try to interpret the issues and try to lower the tension and try to encourage settlements. Okay. The conciliation panel must dispose of its recommendation within 3 months of its reference. If you refer to them, within 3 months they will end it. Okay, procedure is very simple. How do you think it will be settled? So a meeting will be called, venue will be decided, parties will come, they will each submit their own settlements, then conciliator will give a proposal. If parties have agreed, then they will settle it. The mediation and conciliation, they don't have to follow the entire CPC or CRPC, which is now BNSS Act. They will follow their own procedures, but it will be guided by principles of natural justice. Okay, with this we have completed our entire chapter. Matters which cannot be referred to mediation and conciliation. Okay, your matters such as inspection, fraud, criminal cases, public interest, where compounding cannot be rejected, etc. So all these things cannot be referred. With this we've completed the entire chapter. All the important things, the exam questions will be framed from your, I hope you understood the concept. You can go and read it from our from your modules as well. Okay, so with this I have concluded my marathon. Thank you so much for watching this. My request to you all, do share it with your friends and do like the video as well. Okay, if you like it, even you're watching it later, just put it in the comment section. We'll love to hear from you. How did you find the marathon and how did it help you? Thank you so much, guys. I will see you all again very soon. Thank you, and do join our WhatsApp groups. The links are given for CS Professional new syllabus in the description of the video. Do join. We have a lot of sessions, etc. that we conduct. So that is it, guys. I hope you all enjoyed the lecture. In the chat box, everyone. Okay. Good night, everyone. Thank you so much for your kind words. Ashwarya, okay, thank you for being there till the very end. Thank you so much. Okay, all of you all. Okay. Good night, everyone. I will see you all again very soon in the next marathons. Do inform your friends also. Okay. Naveen. Okay. Great. Thank you so much. I'm happy it helped you. Good night. And all the best for your exams.